ready to roll over here. So again, feel free to chat in where you guys are joining us from today. Again, we'll start here promptly, pretty much at the top of the hour. All right. Good afternoon, everyone. We are going to go ahead and get started today. So welcome, everybody. I'm going to cover a few informal aspects over here. I'll even bear with me here. Trying to get my video up and running, and we'll see if we can do so here momentarily. Bear with me here. All right, there we are. Sorry for the brief interruption. Getting the video up and running here took us just a moment. So sit down, tune in, turn on. Again, a few informalities as we do get off and rolling today. So welcome, everybody. I'm joining you guys from Payson, Arizona. It's a little mountain town, just about hour and 20 minutes outside of Phoenix. Anyway, I always ask people to kind of chat in, let us know where you're joining us from today. I always kind of appreciate that. People usually joining from all over the world. Sorry for the brief interruption over there. I was just making sure I could get the video up and running. So with that, we're going to start here momentarily. This is Ultima Trades. Again, my name is Don Kaufman. I'll do a little bit more of a formal introduction here momentarily. One of the things that I just want to state here in just a minute is, sorry, I'm just getting everything, making sure that all technology is up and running here. But one of the things that I typically state throughout the course of today's presentation is you can ask questions. This is live. People always ask that. In fact, just to display, whenever everybody always asks that question, is this live? Yes, it's live. If you take a look, I'm going to use a live trading platform a bit throughout the course of today. I'll probably even execute a couple of trades if that's all right with everybody. So sit back, relax. I'll tell you what, I am going to run through a tremendous amount of material. So I'm shooting for, I'm going to try to shoot for about 90 minutes or so today. I know that's a little bit longer than maybe what we had scheduled, but I just keep adding more and more to this slide deck, as it's been a pretty spectacular year for precisely what I'm going to be discussing today. So again, feel free to ask questions throughout the course of this. If you see me looking around here a little bit today, I'm working on multiple monitors, and the monitor, of course, where I can actually see you chatting in. Again, there's a Q&A box and there's a chat box is far off to my left-hand side. So with that, let's go ahead and get started. All right. Ultima Trades 2021's high probability income generator. Again, my name is Don Kaufman, and you are watching a TheoTrade presentation. Just moving the seat out of the way because I've decided, yeah, I got to stand for this. So this is a risk disclosure. We're not financial advisors nor a broker dealer. I always throw this up here right up front simply because I did spend a pretty considerable amount of time in the brokerage and professional trading world. All right, this is why you're here today. So let's right off the bat simply discuss what we're going to walk you through today in some extent. So we're going to discover a little bit about Ultima Trades. And by the way, I want to clarify something here, which I will also make very clear in a moment. Ultima, it's not ultimate, and we'll describe exactly what Ultima trades happen to be and why they are so ideal for the current market environment. Couldn't be a better environment. So you can potentially generate monthly income. Obviously, we're going to be talking extensively about generation of monthly income here. We're actually going to look specifically at a trading symbol professionals use on a daily basis to create these types of Ultima trades. I'm going to be very specific, and I'm actually going to talk about this in the next 5 minutes. And that happens to be what Ultima trades kind of amount to, and specific symbols here. You're going to learn how and where you can find edge as a retail trader. That's something that eludes a lot of people. So as I was saying, again, feel free to jump in, ask questions throughout the course of today's presentation. And if I do not hit your question throughout the course of today's presentation, I'll answer it towards the end of it. Listen, I want to make sure that everybody gets exactly what they want out of today's presentation. So we're going to talk about edge as a retail trader. And that's when I say, there's always going to be questions that come up around that specific topic. We're going to talk about reaping the benefits of high probability trades while learning how to really mitigate some of the back end risk. And that is not taking very large losses, which is critical, obviously, especially with high probability trades, and find out which products are, and when I say products, which candidates, right? What are we actually going to trade? What are we going to trade here? What's going to be the most viable, and what candidates or symbols are going to be a recipe for disaster? So with that, let's jump a little bit into it here. Free auto expected move indicator. There happens to be an indicator that I use just incessantly throughout the course of not only today's presentation, but within my own trading. It's called the auto expected move indicator. I'm going to show you it in just a moment here. The indicator itself is a value of $500. Because I use this indicator throughout the course of today's presentation, and I talk about this if I pop a video on YouTube on a nightly basis. We use this indicator again constantly in everything that we do, and we feel it's imperative that if we're going to discuss it, that we provide it to you. So our gift to you today, stay with me right until the end of this broadcast, and we will provide to you the auto expected move indicator. And it's literally an indicator that has changed the way that we view markets. In fact, here, I always bring up this is a screenshot, right? It's a screenshot, talks a little bit about expected move, but again, I got to be honest with you, I'm a very, I like to be very, very dynamic in this. And with that, I'm actually going to pull up a live trading application. So I use a multitude of different trading applications. Everybody always asks me this. By the way, the other aspect I want to let you guys know right up front. You ready? I'm no holds barred. I will show you everything from account balances to every single trade that I do. Here is an account over at Tastyworks. In fact, I have 2 different accounts here at Tastyworks. Okay, 2 different accounts over here at Thinkorswim. And again, I will kind of toggle back and forth between the trading applications. These 2 trading applications are unequivocally, they're the most pivotal trading applications in the entire industry, bar none. And it's why I'm on them. And I'll discuss here momentarily kind of my history in really both of these trading applications. So with that, the auto expected move indicator, if we take a look at something like, let's go cruise over to the SPX. The SPX, the mother of all products, okay? How can this indicator help you? This line is actually part of an auto expected move indicator. And what this line actually represents, it's what the option marketplace depicts risk to be. So if you look ahead. And by the way, this is a forward-looking indicator. It doesn't use past data. What it actually uses to generate those lines, okay, is specifically the option marketplace. Now, there's billions of dollars being traded in the option marketplace. And the options don't tell you which way the market's going to go. Okay, the option marketplace, right, simply says we're going to move this far, meaning like we're going to move up $80 or down $80. And that is pretty much what the expected move does. So if you take a look at the SPX, this is, again, it's the mother of all products, the SPX. It says we're supposed to move $80 higher or $80 lower. Have we done it this week? Not only did we do it, we tagged it and stopped on a dime. And that's one of the many uses of this particular indicator. But this stuff can work in products like NVIDIA. Okay, you look at NVIDIA, look at that. Perfect reversal right on the expected move. Last week, we tagged the upper edge of the expected move. We can go on and on. We can go all day long with this. Take a look at something like Tesla hitting the upper edge of the expected move, reversing off of it. Okay, there are so many facets, so many uses for this particular indicator. I stress to you, stay with me right into the end of this webcast. We will give you a copy of the expected move indicator. Now, a few housekeeping items. Housekeeping, this is skill set. I'm going to run through a tremendous amount here in the next hour and a half. And again, I am going to run to the tune of about 90 minutes. I let everybody know that right up front. Why? Well, I have a lot to cover, huge amount to cover. So as I say, this is skill set. You're going to need to pay attention. No matter if you're a complete novice or, extremely experienced in this business. I've actually geared this presentation. There's kind of little bits and chunks for both ends of the spectrum. Again, from the absolute novice to some of the most extreme traders. And I'm going to challenge both sides of that. So shut the door, turn off Skype chat, whatever else might be distracting you. Close Facebook, delete Facebook, get rid of Facebook. Put phones on silent mode, get the kids out. Mine are home. They're downstairs. They're never leaving. Okay. You took the time to be here. This is important. Focus on being here. So with that, a little bit about me. There are a couple people that are probably brand new that have no idea what a TheoTrade or a Don Kaufman happens to be. So again, I'm Don Kaufman. If you ever need to get a hold of me after today, I'm very big about this. Okay. Email us. Okay. Right here. Okay. support@theotrade.com. Now we do use a common inbox. Right? What a common inbox basically is, we use one inbox for everybody. But if you put Don in the subject, it goes directly to me. So just support@theotrade.com. Don't ever think that I won't answer directly. I do, and I do every single day. We answer hundreds and hundreds of emails every single day here at TheoTrade. So a little bit of background on me, because again, some people are totally unfamiliar with what TheoTrade is or where I came from. And I always start this by saying, I watched order flow for 15 years, and that is in very large part what's kind of brought me here. Some people don't even know what order flow is. I'll explain that here momentarily, but how I got started in this business, very differently from most people. I literally grew up in this business. I grew up around traders. I have family members that were market makers in Chicago. So, some people have like regular family dinners. We'd go into Chicago and sit down around Thanksgiving and talk about, options being like in the money, out of the money, arbitrage. I grew up around it. People ask me like, when did you learn about the marketplace? I don't know. I don't even remember. Okay. I mean, I pretty much came out of the womb, like knowing what a call and a put was. It was that kind of chaos. Anyway, in the late 90s, right out of college, I didn't do a degree in finance. I had no intention whatsoever of getting into this business. I really didn't. I was very likely to go to med school. I have a degree in molecular genetics. You want fries with that? So in the late 90s, though, 3 weeks out of college, I had a cousin that was still trading and invited me. And hey, I ended up clerking on the floor. A few weeks after that, I went to work. And in Chicago, kind of full time, never left. So about 2 years after I started my trading career, I knew a couple of traders on the floor. They said, hey, we're starting a brokerage firm. We're going to call it Think or Swim. We don't even know what that means yet, but come on, come with me. Anyway, I went to work for Think or Swim. And I actually started contracting for them all the way back in 2000, like right during the internet boom. Went to work for them full time in 2001. And what I did for Thinkorswim is I actually built the entire education side of the company, helped a lot on the trading application as well. So I built, again, the entire education side of it. I was there on the executive team when we took the company public in 2007. I was there when we were acquired by TD Ameritrade in 2009. And people always ask, after TD Ameritrade, how was it? So I had signed a 5-year clause to where I belonged to TD Ameritrade for 5 years, and I exited in 2015. 2016 is when we actually launched TheoTrade. So it's a little kind of background on me. Again, in my time spent at both Thinkorswim and TD Ameritrade, I ran the entire client education division. And the most important aspect of that is we built education, okay, both at Thinkorswim and TD Ameritrade, completely. The entire education was designed around what traders were really doing, what retail traders were doing. We studied everything that retail traders did. And at my time at TD Ameritrade, okay, we had 7 million clients. We got to see everything that you did. And that's what order flow is. When I say that we see everything that you did, we explored, like, didn't matter whether you bought stock, whether you sold a covered call, if you've ever traded futures contracts, we knew it all. And we actually studied big data on this. We would literally go and say, like, if this person sold a covered call, what's the probability 6 months from now, of having made money? If this person used an iron condor, were they successful? And we actually used a lot of regression analysis to develop education. The only problem with that is the regulators wouldn't let us use the information. So several of us picked up, we left, we launched TheoTrade. Most of what you actually are going to hear specifically today, okay, is derived from having watched client order flow for the better part of 15 years. And not just myself, there's several of us here at TheoTrade that actually come, and our origin is actually Thinkorswim and TD Ameritrade. So again, what you're going to watch here today comes from watching billions and others' mistakes and the knowledge of what works best specifically for you, for retail traders. So it's a little background in this. A couple of TV appearances. I still do TD Ameritrade TV on a weekly basis. So pretty active still with that group. Do CNBC from time to time. It's myself versus, of course, Kevin O'Leary, the shark himself. By the way, I was short Apple. He was long. I think I had more hair here. He never had hair. Moving right along. Let's get down to business. What are Ultima trades? So something we've been talking about throughout the entire course of 2021. We're right on the verge of a new year. Okay. But one of the things, and one of the most critical things we've been talking about in 2021, specifically are Ultima trades. So one of the first things I want to start with, I want to start simple, and then we're going to work into the extreme. You ready? Okay. Higher volatility has resulted in significantly more options premium. Now, I said the O word. I said options. Okay, calm down. Okay, because we are going to use that terminology a little bit today. So higher volatility. And how do I denote higher volatility? So a lot of you guys are actually familiar with what we term. And again, I like to be dynamic. I like to use like a live trading application. So this is the VIX. Most people look at the VIX. Huh? How many people here do look at the VIX? By the way, these are not rhetorical questions. Jump in here at any time. It's okay. You don't have to hide. So a lot of people are familiar with the VIX. Looking at the history of the VIX, let's just go back like 5 years. Just make a quick and dirty point with the VIX. All right. So nobody here wants to admit. Okay. By the way, you can see a Y for yes, an N for no. But all right, I'm just kind of curious. Who here is looking at the VIX? Who's not looking at the VIX? Huh? Come on. Admitting it's the first step. I'm drinking large amounts of caffeine. It's probably not to your benefit, but it's fun for me. Take a look at the VIX. From the onset of COVID, the VIX has been significantly higher. Even with the VIX right now at 1759, one of the amazing things is the VIX is still high relative to the fact that the market's sitting at all-time highs. I mean, that unto itself is pretty shocking. So there's this elevated, if you will, amount of risk in the marketplace. That's pretty self-explanatory. But then on top of it, options implied volatility skew is at historically high levels. A lot of people aren't familiar with skew. You're going to be here momentarily. Then the volatility remains at record highs, which is actually Ultima. When people ask me what Ultima is, in this business, you got volatility, right? So there's volatility, which can be representative of the VIX. But then you've got something called Vega, and then after Vega, okay, we have what's called VAMA, and after VAMA, we have what's called Ultima. So when people say like, how are you making money? And I'm like, well, I'm using this Ultima to my benefit. Like, what are you talking about? I'm talking about the volatility. That's what Ultima really breaks down to. And you can look at this, and I'm going to look at this with you specifically, and you're like, what are Ultima? I'm going to show you right here, right now. You kind of want to know where edge lies in this business. I'll dig into that more, but I want to show you initially where it's coming from, all right? Markets right now are not, okay, they're not living in this perfect little world. Markets are heavily skewed, okay? So some people are familiar with the terminology of skew, some people are not. Like if you look at this, like what do I basically mean, all right? What's going on is markets, there's distortion in terms of pricing. And I'm going to show you exactly what that distortion happens to be. The first thing is you need to know this, okay? There's a symbol that you can pull up on every major trading application, and it's called skew. It's S as in Sam, K as in kick, E as in echo, W. Can't screw up W. So it's skew. So what is skew? Well, first of all right, you know what? This is where, again, I can go over to the live trading application, but you can see skew back here in 2012, 2013, 2014, right? This was the higher end of skew, and that was like 125. I'm just making a quick point, okay? Things got a little crazy right over here, and you're like, well, what happened there? A little volatility in the marketplace, and skew got a little higher. Yeah. And what's going on now? Complete and total insanity. Look at the skew. That's 2 days ago. So if you want to see what skew is right now, here, go to a live trading application. To the trading application we go. Down to the bottom of the screen. And here's actually, there's a symbol for skew. Now, if you pull up skew, it looks all choppy because skew is technically calculated at the end of the day. But look at skew. Last night actually closed at 153. We're talking like insanity high, okay? And people don't get it. They don't understand what that really amounts to. The distortion in pricing is such that, okay, the edge is greatly in the favor, okay, of you. And that's exactly what we're going to look at. But we also want to look at something called like the VVIX. Even VVIX, the volatility of the volatility, okay, has been above like the 110 level for almost a full 2 years. Unheard of. No one's like, since the, these things have been tracked for years. All right. That's like a 3-year chart. You can go back and pull up all the way since like, 2012 timeframe. You can see, historically speaking, all right, these levels, they're just simply off the charts right now. So what does this amount to? Because you're looking at this, you're like, okay, skew is really high, VVIX is really high, volatility is high. Actually, the VIX itself isn't that high, but the VIX, I don't love the VIX. I like looking at skew. How can we use this to our advantage? That's the bottom line is, it's all for nothing. Like it's all for nothing until you can translate this into trades and more appropriately translate it into potential profitability. And I stress that to you because, again, it's kind of cool to talk at a cocktail party like, oh yeah, there's some skew in here. Oh, look at the VVIX. Okay. But in the end, you have to be able to translate this. And translation is exactly what I do. And that's what we're going to do today. When I say translation, we're going to take what we just looked at, just glanced at, skew. Even if you don't know what it is, it's extremely high. VVIX, if you don't know what it is, it's extremely high. Volatility is still really record high with markets at highs. How can you use this to your advantage? Skew provides edge in sale of out of the money options. Okay, that's it. Full stop. Provides huge edge in sale of the out of the money options. And as I said again, I said the O word. Okay. We're going to talk a little bit about options today. Some of you have absolutely unequivocally no experience in options. That's fine. It's absolutely fine. I'm just going to make a quick argument for here. Even if you have no intention of ever trading an option, okay? The argument is a very simple one. You need to understand what options are doing. You need to understand option pricing if you're going to be involved in this market. Okay, doesn't matter whether you're into fundamentals or technicals, you have to understand what's going on in the options marketplace, because the option marketplace now is it's the cart leading the horse. Like everybody's like, oh, the stock made the move. Well, it was the option trade that actually forced the stock to move. Okay, literally the option marketplace, okay, is so robust today that it's moving the entire marketplace. Many traders, right, out there today are currently buying options, and in effect, they're tweaking pricing to be beneficial for premium sellers. So that right there, people, that is a very, very bold statement that I just made. So I come in here and I say, people are just buying options like going out of style. How many of you guys have actually bought some options? Come on. How many people have actually bought options here? Yeah? Any buyers, 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 and all buyers? Who's buying options? Okay. So the reason I make such a bold statement about buyers of options, generally speaking, if you go and you look back at the last 2 years, the onset of COVID has brought, okay, the largest boom to the retail options marketplace ever. All right. More accounts opened in April of 2020 and in May of 2020 than they had in the previous 5 years. Think about that for a second. More retail brokerage accounts opened in a 2-month period than in the entire previous 5-year period. You're like, how is that even possible? It's a good question. Okay. I spent 15 years in the brokerage world. The numbers that I had heard that were coming out of TD Ameritrade, the numbers that were coming out of Charles Schwab and E-Trade, okay, Robinhood, are downright phenomenal. So my statement that many traders are buying options comes from this. If you're brand new and you opened an account, okay, and you opened that account with Robinhood, Robinhood limits your ability to do, okay, much of anything. They kind of like force you. You're like, you gotta buy options. That's all they let you do, especially if you have a $2,000 account, because they say you're a newbie, right? So everybody that piles into this business are net buyers of options. And what happened is literally at the onset of COVID, tweaked and distorted option pricing to be the benefit to the premium sellers. And we're going to talk about this. In fact, I call this retail traders gone wild. Now, this doesn't look all that awe-inspiring, okay? I took a screenshot here. This is the OCC, which is the Options Clearing Corp, right? This was from December 23rd. So why the 23rd? That was, okay, the Thursday before Christmas, which is typically a really light volume kind of a time of the year, right? We still traded 36 million contracts. Take a look at this though. In 2021, the average has been basically 40 million contracts, 40 million contracts. Now remember, I left the business 2015, a big day in the options market was 20 million contracts. Now we're averaging almost 40 million. It's insane. Okay, check this out. It's only growing because December of 2020, we were averaging 35 million. I mean, it's just exploding. Like options growth has absolutely exploded. And this is all due to retail traders. Okay, and I say that again without unequivocation because you know that these firms like Robinhood just went public. Of course, how'd they do that? How'd they do that after the huge scandal? Robinhood had a huge scandal in January and February of this year of 2021. Everybody forgot about it. They went public. I mean, the stock's not doing that well. The point is, retail traders just rocking the marketplace, man. And this is the time I'm telling you to take advantage of it. Okay, learning to sell options. Many of you have heard through the grapevine that selling options is the way to make money. How many people have heard that too? Okay, so how many people have actually heard that selling options is a great way to make money, especially like on a month-to-month basis? People always hear this, okay, and yet they don't really. Some of you have experimented with it, some of you haven't, and if you've experimented with it, you know full well there's risk. You have got to learn to do this. If you're going to do it, you have to do it properly. Okay. So what I'm going to do today is I'm going to actually show you what that grapevine actually means. We're going to separate myth from real risks, fact from fiction. Okay. We're going to separate all the garbage out from like what is reality of this business. And I am going to show you, as I said, I am a very no holds barred individual when it comes to trading, execution, account statements, okay, everything. I mean, you can see P&L on the day over here. You can see everything I do at every single brokerage account, every position I take. And if this looks like extensive, it's because I'm managing, okay, quite a number of positions. And if I accumulated these accounts, it's over $1 million that you're looking at inside of a couple of accounts. Nothing big though. I don't have any big positions on, Oh, it's 5 contracts. I can't stand when people get up there like, I did a 100 contract trade inside of Tesla. And I'm like, you bet big, you lose big. It's ridiculous. This business is about incremental gains, okay? And it's about making a living. It's not about, the showboat. So let's get into it and let's show you exactly what to do here. First, I always throw this in here. Don't panic. You can do this. You may know nothing about options. It's okay. All right. If you know nothing about options, I want you to grasp really big concepts. If you know nothing, big concepts, probability, risk. Don't worry about like the little nuances. For those of you, however, that are experienced, because some people tune in here and they say, I already know all this. Trust me, you don't, okay? What I'm going to explain is absolutely going to twist your mind if you're experienced, because this is going to fly in the face of what convention has taught you in options. And again, I've been around options my entire life. Stuff has shifted dramatically in the last 2 years, and so few people are on it right now. Okay, they're kind of left in the dust. This stuff doesn't seem to infiltrate into the retail world. Okay, the retail world is out there. They're like, well, I'm like, what are you doing? They're like, well, I buy calls in NVIDIA, and then I just pray that NVIDIA goes up. And I'm like, yeah, but what if that doesn't work? They go, then I lose money. And I'm like, that's not gonna generate a career. That might make some big home runs, but sooner or later you're gonna strike out. So again, big concepts, probability. One other huge aspect here, and I want to set this straight immediately. Selling premium can now be done in very small accounts, and it can be done in retirement accounts. Now, this says under $5,000. You have to have $5,000 in a retirement account to technically sell options premium. You have to have $2,000, okay, in a regular, what we call Reg T account, all right, to be able to sell options. And again, bar none, people do not understand. The rules also changed in the last 18 months specific to a retirement account. Most people don't know that you can do anything you want now inside of your retirement account. And people go, my brokerage firm doesn't allow that. That's right. Most brokerage firms don't allow it. But they did, in fact, change all the rules inside of an IRA. People don't know this, but did you know you can even short stock now in an IRA? Rules changed, people. Except most of the brokerage firms go, not going to let them do that. But the rules have completely changed in this business. So let's dive right in. All right. So there's some verbiage to get used to. I call it the many facets of selling premium. Selling premium, generally speaking, means selling options. All right. By the way, hands towards you, seller. Hands towards me, buyer. So we're going to actually learn to sell. Selling premium can be referred to in a couple of different ways. You can call it selling premium. You can call it credit spreads. You can call it short call spreads, short put spreads. You can even call it delta neutral trading. Delta neutral trading is very often akin to selling premium, selling naked, right? Selling naked sounds exciting, but selling premium, it can be used to create both bullish and bearish positions. But generally, this is actually considered more market neutral. So when I say that, I mean, you're not going to see a lot of MACDs, a lot of Fibonacci's, the Bollinger Bands. You're not going to need them today. Today, you're going to have to understand the nuances of selling premium. When I say the nuances, let me tell you guys right now, me personally, and this is not everybody at TheoTrade, I'm just speaking for myself. By the way, TheoTrade, we are not a one-trick pony. TheoTrade is not just Don Kaufman. There are 7 other full-time traders here. Okay, everybody having professional trading experience, a minimum of 15 years. We have some of the top market technicians, but me, I'm a little unique. I am a quant. I'm a quantitative trader. Always have been. I grew up around quant traders. Most people didn't know what that was, 20, 25 years ago. But I'm a quant. I'm into probability. Okay. In fact, I'm into probability and profitability. Your trading is based on probability. We can create trades all day long with a 90% probability of success. But think about this. You can create trades with a 90% probability of success, but you could still lose money. And I always pause before saying that because I get people every single day that send emails, and we get literally we get hundreds of emails. I was saying that earlier. We get hundreds of emails a day. All right, here at TheoTrade, and every single day people go, "What's your track record?" And I go, "Okay, what exactly are you looking for?" They go, "How often are you right?" And I go, "I could be right 95% of the time." That doesn't necessarily going to mean you're going to make money. Every one of you could be right 95% of the time. You could teach, okay, a monkey, an actual monkey. In fact, you can see my little monkey in the background over here. It's a monkey in a tuxedo with a headset, right? It comes from a thing from Thinkorswim years ago. For those of you that have no idea, Thinkorswim a lot of years ago, we used to, when you opened up an account, we would ship a monkey to you in the mail. So that is a monkey. All right. I don't know where it comes from. Anyway, you got to remember something about probability. Don't ever let anybody tell you that being right or being wrong is what is going to make you money in this business. Because I'm telling you right now, you can be right and still lose money. So probability alone does not make you profitable. Remember that. And as I said, I'm going to separate fact from fiction in here. So don't get all upset. They're like, I'm right 70% of the time. And I'm like, golf clap. Doesn't make a difference. Doesn't make a difference how often you're right. All right. Markets are going to be a trade-off, always a series of trade-off. Higher probability, higher risk. 90% of the time, you could still lose money. So where can you find edge? That's what we have to get into here. That's what you're here for. And if you are, like, good, because get ready, because I'm about to show you something incredibly important, right? We're actually going to talk a little bit about probability and some of the premium selling tactics. So for this first example, okay, first example here, what I want to allude to in this case, we have a stock, right? And the stock in this case is trading right at 50. By the way, this is always how I kind of represent markets. Like I represent markets as here's a stock at 50. And by the way, I call every single stock stock. Okay. So stock. There's actually a coffee drink called stock. But I came up with it first, I tell you. So the stock is trading at 50. It doesn't matter what it is, right? The stock can go up to 60. The stock can go down, for instance, to I don't know, 40. But what I'm showing you here, and I always display this as a distribution curve, because in my mind, like it doesn't matter whether you're bullish or bearish. Like that's not how I function. I look at the probability. Well, we can go up here, we can go down here, we can go down here, we can go up here. It's pretty normal. And you go, no, the market only goes up, except it doesn't. If you're Zillow, if you're Zoom, if you're Peloton, if you're Alibaba, if you're Baidu, if you're anything Chinese related, you're going down right now. Or if you're like COVID darling, like the Pelotons and the Zooms and you're not going up, you're going down. This has actually been a wild year because this is the most bifurcated we've ever been, all right? Meaning that, you know, products go up and products go down. But the interesting irony is actually a huge number of products going down this year. Nobody recognizes that because it's covered by Microsoft, by Apple, by Google, by Amazon, by Tesla, by NVIDIA, right? But I wanted to represent this. So what we're going to do for the very first example here, okay? I'm going to keep it slow. I'm going to keep it methodical. We're going to go out all the way out here, okay? We do not own stock. Just say no to stock. Why? Say it ties up a lot of capital. I'm going to go out, right? In this first trade, I'm going to make a very high risk trade, but I want you to understand. I'm going to go out, okay, in this trade, and I'm going to sell, okay, a 60 call. And that 60 call is going to be trading for a $1, okay, credit. So let's put this down here. I'm going to sell a 60 call, collect a $1 credit. Okay, stop there. Some of you have absolutely no idea what an option even is, okay? Well, first of all, options, they give you rights or they give you obligations. Options are also good for a period of time. Let's say this one is good for 2 months, 2 months, 2 months, 2 months. Now, okay, as I bring this example up, I look at it and I say, I'm going to sell a 60 call. Some of you have no idea what a 60 call is. And now you know, well, a 60 call, you collect $1 credit, but it's good for 2 months. I don't even know what this means. So let's talk a little bit about the 60 call. This is where if you are experienced, okay, if you're experienced, bear with me for a moment. If you're inexperienced, we're going to go through a couple of examples. By the way, those of you that are experienced, oh, don't worry, we're coming to you next. So a 60 call, let's not worry about selling it. Let's just explain what a 60 call happens to be. A 60 call, let's say you go out and the stock is trading at 50. Do you own the stock? No. Do you want to own the stock? No. What do? You open an account with Robinhood. Why did you open an account with Robinhood? You're like, I don't know. It sounded like a good idea. So you go out and you open the account with Robinhood and you buy a 60 call. So if you're buying a 60 call when the stock's trading at 50, so the stock is way down there and you're buying the stock way, you're basically buying a 60 call. The 60 call, if you buy it, buying the 60 call gives you the right to buy the stock at 60. Do you have to buy the stock at 60? No, but you have the right to buy the stock at 60. Okay. So why are you buying the 60 call? Because obviously, if you're buying a 60 call, you want that stock to go where? Up. How far up? Really far up. So why buying the 60 call? Because I had to pay $1 for the right for the next 2 months. And this stock has been ripping to the upside. So what happens if the stock went from 50 and went to 60? So if the stock goes to 60, you have the right to buy the stock at 60. But the stock is trading at 60, but you have the right to buy the stock at 60. What's that worth? And you know what the answer is? 0. Who wants the right to buy the stock at 60 when the stock is trading at 60? Nobody does. How about this? What happens if the stock jumps up here to 70? You go, I'm gold, Jerry, I'm gold. A 60 call gives you the right to buy the stock at 60. So if you have the right to buy the stock at 60, could you buy the stock at 60? Yes, you could buy the stock at 60 if it's now trading at 70. And turn around 2 seconds later in the open market. You bought the stock at 60, then you sell it at 70, you make how much? Okay, right? You make $10, right? By the way, 10. You're like, no, that's 1. I go, no, it's 10. Depends on where you are, okay? Anyway, so $10. So you're gonna make $10, minus of course the dollar you paid for it. But from a probability standpoint, let's back this up for a second. From a probability standpoint, what could this stock do? Okay, well, this stock could stay at 50. The stock could go up to 55. The stock could go down to 45. The stock could go even to 40. There's a lot of different places that stock could go. But the point that I'm making, if you were a buyer of the 60 call, again, if you were the buyer of the 60 call, let's make this without an equivocation. You buy the 60 call, you need that stock to go up. Okay, you need that stock to go up, and you need it to go up fast and furious. Otherwise, you're going to end up doing what? You're going to lose your dollar. It's okay. You're going to lose your dollar if that stock doesn't go flying up. This is where most people are. This is also an incredibly low probability trade. It doesn't mean it's wrong. It's just a very, very low probability trade. Why is it so low probability? Because the probability of getting from 50 just to 60 is inordinately small. I mean, you don't know what stock this is, but it would still be inordinately small. And then to get to 60 doesn't even make you money. You got to go to 60 plus the dollar just to be able to break even. You got to get it to 65 to make this thing worthwhile. Like, it's crazy. And you only have 2 months and the clock is ticking against you. So instead of you being a buyer of a 60 call, and again, a buyer of a 60 call gives you the right to buy the stock at 60. Again, do you have to buy the stock at 60? No. See, when the stock runs up all the way to 70, you don't ever have to buy the stock. You could just turn around and sell the what? You sell the call. You buy the call for what? You buy the 60 call for $1, and you might be able to sell the 60 call for $10. No one wants to trade the stock anymore. Who trades stock? Market makers. Who trade stock? Institutional money managers. Who trade stock? People that have so much money in the account that they can't just purely trade options. The rest of the retail world, it's all options now. Okay, it's gravy. It's all options. And it's a big, big differential in here. So with that, we're not going to go out. In this next example, we're not going to go out and we're not going to buy the 60 call. We're going to sell it. And this really freaks people out. The first time you've ever heard this, you go, wait a second. Whoa, whoa, whoa. Slow down there, cowboy. Do you own the stock? No, I do not own the stock. They go, did you ever own the call? I do not own the call. I am opening the position by selling a 60 call. In options, okay? In options, you can open positions by being a buyer, or you can open positions by being a seller. You go, how can that happen? Because when you buy a 60 call, it gives you the right to buy the stock at 60. When you sell a 60 call, it gives what? You an obligation to do what? To give somebody the stock at 60. You go, but I don't own stock. And I go, I know, isn't that awesome? So you're just selling the 60 call. You're selling yourself into an obligation, okay? So put the chains on. You're selling yourself into an obligation. I feel very obligated. But before that obligation, you get a buck. You realize the probability of collecting that dollar is very, very high. Why? Because the stock, which you don't own, could stay at 50. If the stock stays at 50, you get to keep the dollar. If the stock goes anywhere down here to like 40, you get to keep the dollar. If the stock goes up to 50, 55, you get to keep the dollar. If the stock goes to 60, you get to keep the dollar. You're going to wet yourself, but you still get to keep the dollar. Where do you start losing money? Well, above 60 plus the dollar. So at 61, you start losing money. You're like, I'm going to hemorrhage. But think about the probability in this trade. It's pretty high. Like this trade could have like as much as a 90% probability, okay, of making the dollar. You go, oh, that's interesting. So what's wrong with the position? What's wrong with the position? Okay. You're naked. You have no protection. What happens if the stock goes from 50, jumps to 100? Okay. What if this is Twitter? It's Twitter. And Twitter, okay, nobody likes Twitter. Maybe the stock. Nobody likes Twitter this year. Okay. Bad monkey, bad monkey. Even the CEO doesn't like Twitter. He left. Okay. So nobody likes Twitter this year. Let's say this company gets bought out and it was trading at 50. The next thing it trades at 100. What are you? You are screwed. Okay. That is going to leave a mark. We're going to show you how to mitigate the risk. So with that, you know what? Let's actually show you a quick example here. Blank the screen for a second. Let's go to the market. Okay. Let's go to the tweeter. Let's actually go into Twitter. So I'm going to go into Twitter. Okay. And I'm just gonna, I don't know, should I open up the 51-day options? What do we got in here? Yeah, this works. Okay, this will work. Here we go. Let's look at probability. What do you want your probability to be? You guys tell me, what do you want your probability to be in this trade? Anybody? What do you want the probability to be in the trade? So, because one thing I was really hammering away at earlier is that probability doesn't mean anything anymore. Because like when you say probability, like you could be right 90% of the time. So on any major trading application, you could just cruise in here and just click and go probability, for instance, out of the money. Okay. Here, you want a 90% probability of success? Done. There it is. I'm so sorry. It's 87.66, but you can sell this option, okay, which is exactly $10 out of the money. I mean, this is the example that we just did verbatim. It's the example that we just did, but in this case, we're only collecting 67 cents. But the point that I'm trying to make over here is my example, well, it's real, okay? That is, well, it's real because that's a 52. So if you looked at this on a distribution curve, stock right now is trading at what? 42. I'm just out here selling a 52.50 call and collecting how much? 68 cents. And what is the probability? 90%. It's like a 90% probability. I just wanted to show you that how realistic an example, we take what is just, feels esoteric and out there, and we just plugged it in and like, oh, look, there's a 90% probability. Okay. And it's that easy. Now we're going to start to take this steps further. Believe me, we're going to start to get into a lot more depth. So for those of you that have some experience in this business, okay, this is where you're going to start to come into this. Selling options equals positive time decay. Now, everybody that's actually ever traded an option, which is, again, how many people here have traded? I got a better question. How many people tuned in? Because we have a lot of people tuned in today. How many people that are tuned in have never traded an option before? Never traded an option before. You could just say me. Okay. Have you never traded an option before? It's like a negative consent in here. Only like one person's come in here. So my assumption is, okay, like thousands of people watching, there's only one person that's never traded an option. I do not believe that. I believe that some of you, if we lit you on fire, would not type in a message. That much I believe. Okay. I actually, again, I like to make these interactive. There's a reason I do this now during the trading day. Number one, the market's open. It keeps me interested. Okay. And number two, like nobody goes anywhere anymore. Okay. Remember the days 2 years ago when you used to get in a car and go places? Those days are over. Okay. So we're going to talk a little bit more to the extreme. Now we're going to build on this. Now, again, if you guys are brand new, just sit tight. Things are going to start to get deep very quickly. You're going to feel like you're Alice tumbling down the rabbit hole. When you sell options, every single day that passes sees the dwindling of the options premium, and you go, I am shrinking. Okay. So you got to understand that options, all right, options are constantly burning. We sold an option for $1, but okay, what I want to do is as time passes, the options you sold decay exponentially. We're going to take a moment to review a little bit about time decay. Okay. Now, a lot of people understand this conceptually, but this is very largely misunderstood. How many people have seen these decay graphs? This is just a quintessential decay graph where the option you buy goes, and just keeps fading into nothing. All right. A lot of you have gone out and you have bought options. And here is the plight of the option buyer. This is what happens to most people when they buy options. So why do you buy options? You buy options because you have a strong feel like the market's going to move this direction. And I made some money, or I heard about a guy, on CNBC that bought call options in Tesla, whatever it might be. Okay. But you went out and you bought options, and you know full well what the decay graph looks like. So you're going to go out, okay, and you're going to buy a call. And you're going to buy a call. It doesn't matter what call you buy. You're going to buy the call and you're going to pay, let's make it a full $3. You're going to pay $3 for this call. So you went out today, yesterday, a month ago, 6 months ago, doesn't matter. You went out and bought a call for $3. You paid $3. All right. So this is actually a debit trade. So you pay $3. How long is the option good for? Let's say that this option is good for exactly 1 month. All right. So the option is good for a month. So what happens to most people is you buy a call and nothing happens in the stock. And if nothing happens in the stock, you're immediately on the clock. What's going to happen is a couple of days are going to pass and the option is no longer going to be trading for $3. Then the option is going to be trading for $2.80. So there's actually, in that very first couple of days that you own it, like let's say you bought the call on a Monday, by Thursday or Friday, the option just dwindles just a little bit, in terms of price. And it goes to 280. And your first instinct, and I always try to explain this to people, is when you start to see the option decay against you, your first instinct is not that I'm wrong. Oh, damn, I'm wrong, because the market stayed flat. So you're not really wrong. Your first instinct is I'm okay, which I'm okay, right? That's what people always say. They're like, well, I bought an option for $3 and now it's worth 280. I'm okay. But then you start to get a little concerned because by the next week, by Wednesday, it's no longer trading at 280. Okay. It's now at $2. So you bought this option for $3, then it drops to 280 and you go, I'm okay. Then the option drops to $2. You're like, oh man, now I need a move. I need something to happen. Okay. And whatever you wanted to happen doesn't happen. And then the option from $2 it just gets annihilated at that point because now you're getting closer to expiration. The next thing you know, it's trading for 90 cents. By the way, as soon as it drops under $1, people go, crap, it's not even worth selling. Now I'm just going to hold it and see what happens. And sooner or later, that option goes worthless. How many people have experienced that before? Because only a couple of people came in and they never said they traded options. So I'm assuming then that everybody that has traded options, you ever experienced this before? Okay. This is the plight of the option premium buyer. Now, this is the part that is going to blow a lot of people's minds. I'm setting you up for something really interesting. This decay graph, okay, is for what we term near money options. It's for near money options. It's not the decay graph that we here at TheoTrade live or die by. Okay. Now we're going to get a little bit up the learning curve. Okay. We're going to bring up the exact same kind of, distribution curve. Now we have a $100 stock. So we're up in the learning curve a little bit. So we're going to go out there. Now we have this $100 stock. And on this $100 stock, and again, we're going to come back to decay in a minute. Bear with me on there. I like that. People been there, done that. Okay. I'm okay. I'm okay. I'm not okay. Oh, this is going to hurt. For 15 years at TD Ameritrade, okay, I also sat on the risk committee for both Thinkorswim and TD Ameritrade. And I've had every email. Okay. I've seen every bad position. Like, you got to understand, I got to sit, I'm the guy that sat behind the computer and I could actually watch you trade. Doesn't matter what part of the world you're in, can't hide from me. We could see all the order flow coming in. We're like, oh, no, lady, don't go in there. Don't buy that. It was interesting. So I'm actually going to show you a very interesting example here. So this is a stock trading at 100. I do not own the stock. I'm going to go out in this example. And once again, I'm just going to sell a call. I think that using the call is the easiest way to bring this to your attention. Like, I think people understand it better. So I'm going to go out and I'm going to sell, in this case, a 120 call. Now, 120 call is way out there. And this is done, and let's say it's done for $1 credit. Now I'm going to pull this down below again. We're just going to sell a 120 call and collect a $1 credit. Okay, timeout. This trade is for 3 months out. 3 months. You go, whoa, I came here today to learn to make money every month, not every 3 months. Calm down there, cowboy. We're going to teach that in a second. You're going to go out and you're going to sell a call. You're going to sell a 120 call. Why is it a 120 call? Do you realize how far a 120 call is? Do you realize how far a 120 call is? Okay. The stock would have to rally by 20% just for you to start to really feel some pain. So think about that for a second. You're selling stuff that's in the nosebleed seats, right? You're so far out, you can't even see the field of play. That's how far out of the money we're going. Why are we doing it? This is what Ultima starts to come into. So when I bring this to your attention, like, people get kind of dumbfounded. They're like, why would you sell something for $1? Okay. Why would I sell that for $1? So I want you to get in this example. You're going to go out and you're going to sell a 120 call. 120 call, okay, obligates you to give somebody stock at 120. But that stock is really far away, like really far away. Because look, the stock could stay flat. Stock could go down. Stock could go up. I mean, this stock can get to 110. That's still a big move. It's 10% move. This stock could get up to 115. Okay, you're still unscathed at that point. But you're like, oh man, I don't want to sweat for 3 months. I didn't say you were going to sweat for 3 months. I simply said that we're going to sell it for 3 months. Okay, then what are we going to do? We're going to make money on it. How are we going to make money on it? I'm going to show you. Okay, this is exactly what Ultima breaks down to. Are we ready? Because this is going to get a little serious now in a hurry. Yeah. Okay. Don't freak out on me here. Don't freak out on me. We're going to go into a live market. We're going to get rid of Twitter. We're going to go to the spiders. What's the spiders? It's the most marquee product of marquee products. The spiders, okay, is the S&P 500 ETF. Look, I'm wearing a spider shirt. Okay. That really wasn't intentional, but I could feel a little spider on me. It's okay. I don't get out very often, obviously. 3 kids locked up in a mountain home. It's snowing outside. Yep, we're losing it. And I'm drinking a lot of caffeine. What could possibly go wrong here? So the point is, why do we go in the spiders? Because every one of you can trade this. It's the most liquid product of liquid products. We're in a holiday trade right now. By the way, I kind of like doing this between like Christmas and New Year's. This is like this dead week where, I mean, what are you going to do this week? Hang out with your in-laws? Oh, that's going to be fun. What do you think I'm doing this for, right? The in-laws are downstairs. I would spend a 13-hour day in my office. It's healthy for you. Anyway, this thing has already traded 2.3 million contracts, 2.3 million contracts. And this is a slow day. Like when we're rocking, this thing would be doing 5 million contracts a day. Check this out. I said we're going to go out how far? How far are we going to go out? 3 months. We're going to go out 3 months. I'm going to open up April options. April options. Why? Because 106 days out. Is that far enough? Okay. You're like, it's January, this February, this is 3 months out. It's 3 months out. It's 106 days out. Okay. And we're going to go out and we're going to sell an option that has a really high probability. Really high probability. Boom, done right here. Look at this, 93% probability, okay? Now the market here is $1.10 or $1.13. I'm fine with that. Let's get this order working, okay? So we're not just gonna, maybe think about it. I could work this order, work it. I'm going to work it at $1.12. Watch this. The market's $1.10, $1.13. I'm going to come in here and sell one of these at $1.12, and I'm going to sell it naked. Do not freak out about margin, because if I hear one person tell me about margin, we can actually teach you to circumnavigate that. Do not worry about margin. I don't care if you have a $2,000 account. You can do this trade. I don't care if it's in an IRA. You can do this trade, right? I'm going to work this order at $1.12. They're going to move the market immediately to $1.12. You ready? Confirm and send. He sends the trade. It's going to move to $1.12. There it is. Okay. And they filled me instantaneously. So the market's 110, 113, and I got filled at $1.12. Better than mid price. You go, how did he do that? Okay. Got to know how to work order flow. 15 years, okay, of which I spent years before that, in the market making side of the business, you start to learn a little bit about order flow. So I just filled the trade. Now, with that in mind, I'm going to take this trade. I'm actually going to bring it up here, and I'm going to write it up here. We're going to go out, okay, right now, and we are going to sell the April, okay, the April what? 525 calls. We're selling the April 525 calls, and we are collecting, in this case, I collected $1.12. Timeout. Okay. Now what do I do? So I just went out and I sold call. That's it. Okay. Now what do I do? Well, we're not done yet. Don't even, listen. So I sold the call, and then I stand there and I go, well, now is the part where we make money. I mean, I'm way out of the money. This market has to rally by what? $50. $50. Can that happen in 3 months? Yes, it can. Look, there's no free money in this business, people. Ain't no free money in this business. But I will show you where there's edge. Okay. What's this option going to be worth? And here's actually the critical aspect of this. What I want you to look at is people immediately that understand options, they just hate selling options 3 months out, because they haven't learned yet that the entire market shifted, skew shifted. Things are completely distorted right now in terms of option pricing and premium. There is incredible amounts of money that can be made by selling longer duration options. In this case, we're 106 days out. I have no intention of holding this option for 106 days. The logic here is to get in and to get out and to make money, what? Monthly. We want to generate monthly income. And again, if you look, and before I even show you how this works, if you look, I got tons of inventory on 79 days, 51 days, 79 days, 51 days. Okay. Bring up my Tasty account, 79 days, 79 days, 51 days, 79 days. I'm out there. I'm out there, Jerry. So if you take a quick glance, what I intend to do is I want to show you there is incredibly good amounts of decay in these far out options. Incredibly good amounts of decay in these far out options. I'm going to close this up. I'm going to look from 106 days. I'm going to look at the exact same option 79 days from now. What I'm getting at is a 525 call, all things being equal. Let's forget about market movement. The market can go up, the market can go down, but let's say the market stays relatively flat after what? Well, here's 106 days and here's basically 79 days. How many days am I passing through? About 27 days. 27 days from now, what is this option worth? Open up the March options and scroll to the 525s. So what I'm doing is by looking at the 525s in April, and then I look at the 525s in March, I'm almost like fast forwarding in time what this option is going to be worth. And the point of me doing this, okay, is very specific. Here we go. Exactly 27 days from now, I can buy this option back, okay? And I could turn around and I can buy, okay, this April 525 call back. What's it going to cost me? It's going to cost me approximately 54 cents. What do I make on the trade? Net, commissions, everything. You're making over 50% in 27 days on an option that is so far out of the money that you're selling the nosebleed seats. Okay. This is one of the things that I just want to drive home to you. There's a lot of different products you can do this in, but how many people here are okay? Like you're looking at this and you go, well, it's not worth it for $1. Okay. Why isn't it worth it for $1? I just rinse and repeat and rinse and repeat and rinse and repeat. Okay. You know what most people are doing right now? They're selling short dated options. They're going to get killed. You cannot sell short dated options. The skew is actually against you in the short dated options. You sell longer dated options. The decay rate is absolutely phenomenal. Do you realize, okay, that in the first 27 days, you're selling an option that is 100 days out, right? In basically 20, 30 days, boom, 50% of the decay is out. What do you do at that point? Gone. You're gone. Get out of the trade. Do it again. Why do you have to sell an option that has 30 days? Oh, you only have to sweat for 30 days. Me? I'm sweating for less than 30 days. Okay. I'm just selling an option that has 100 days and bailing out when there's like, 70, 80 days left. That's it. Okay. Move on with my life. Like that's what this is about. That's what Ultima is actually displaying to you. You can make over 50%. You go, so what do you do after that? After you've made 50%, okay, do you think I'm going to hold this piece of junk option that's now 50 cents for the next 79 days? Are you insane? See, most people like to sell short dated options. Are you insane? The premium is out in the future right now. The skew is out in the future. It is phenomenal. 50% in 27 days. Okay. And you're so far out of the money. Yeah, the market could come up there, but it's going to be incredibly, incredibly rare. This, okay, is again what Ultima happens to be. Listen, I'm doing this. And why sell options so far out in time? Okay. Because again, typically these traders are selling very short dated options. And those short dated options, it's just absolutely, okay, brutal, just brutal as to what the risk happens to be. But that's exactly why people are tuning into this webcast. And what I'm actually starting to breach into is what we call specific criteria. Criteria is the nuts and bolts. What option do you sell? What should be the probability in the trade? What expiration cycle do I do? How do I enter into the trade? How do I exit the trade? And this is what we do here at TheoTrade. It's criteria. It's what we do. Everybody okay at that point, right? Because I like what somebody said too. Somebody came in here and actually said, you can use a limit to buy back at 50%, right? So you can go in there and you can say, hey, I sold something for $1.12. And at any point, okay, in the next 30 days, if I can make 50%, get me out. Like it's that easy. And you go, how can you do that, right? There's order types. There's order types in here. You can literally close for a percentage profit, 50%, right? That's it. I literally clicked on there. It goes, oh, so you can actually buy to close. BTC means buy to close for 50% profit. Yes. This one's at a 50%, 51% profit. Okay. Gold. Like, look, right? I got, profitability working all over here. So almost every single position you can see, and again, this is no holds barred, right? Almost every single position I have on right now has degrees of profitability. Okay. There's one in here right there. You see the one I'm losing on? That's what we call the hedge, sacrificial lamb trade. Okay. We're going to talk about that as well. Listen, this is what we do. Now, before I go any further, okay, again, I want everybody to understand that this is not a one-off. It's not an anomaly. Okay. I can go into so many different products and I can create the exact same logic, right? So here's the QQQ. And the Qs, all right, are currently trading at 400. 400 on the Qs is crazy, right? And you go, oh, but there's no 106-day options. Yeah, who cares? Let's go out here. Here's a 90-day option. Here's a 79-day option. Okay, give it the, whatever. Do what the marketplace will let you. Here, let's use the 79-day options. Okay, and I scroll into these, scrolling, and I come way out of the money. Look, there's an option trading for about $1. There's the 450s. I could sell these 450s. That's $50 out of the money. Do you realize the NASDAQ would have to explode higher? But I have no intention of holding this trade for 79 days. I'm going to sell this option for what? $1.08. Close that up. Okay, close this up. And again, those are the 450s. And look, I just talked about the 79-day, right? Then we're going to open up the 51 days. Okay, let's go look at the 450s. 450, 450, 450. All right, what are they trading for in here? You're gonna love this, 36 cents. This one you can actually make over 60 to 65%. Why? Because the QQQ has more volatility in it. There's slightly more volatility in the Qs. So the out of the money decay rate is actually going to be more rapid, right? Again, this is what Ultima is about. But before we go any further, okay, those of you that are experienced will understand this. These trades have risk. These trades have risk. There's what we call the 90% probability and the 10% hammer. 90%, it sounds great. It sounds wonderful. Sign me up. But 10% of the time, the market rips your face right off. That is a trading term. When you trade high probability strategies and you're wrong, you get hammered. We need to address, okay, one of the major facets of this. And that's what? The risk. We need to address another major facet. What is it? Margin. Don't worry about the margin, okay? When you trade these high probability trades, when you're selling stuff way out of the money, like what's not to say the market could swing up huge or swing down huge. You know, the one thing I want to bring to your attention, again, how many people have sold some option premium, have sold some options premium? I know I asked that earlier, but just a Y for yes and N for no. How many people here have sold some options premium? All right, awesome. Most of you that have sold options premium, okay? Most of you that have sold options premium have done not the way that I'm doing it. You've done what's called an iron condor. For those of you that have no idea what an iron condor is, an iron condor is when someone goes out, they sell a call out here, and then they sell a put out here. So they're on both sides of the marketplace. They sell a call, then they sell a put. Then they buy a call and buy a put. Why do they do that? That's their hedge. And you know, the risk graph for the iron condor, it looks something like this. Okay, wait, no, like that. Yeah, oh, like that. That's the risk graph for the iron condor. So the iron condor, people learn to do this and it has like a 90% probability of success. And I just want to bring the reality of this trade to you. So people go out there and do iron condors. And again, this is what you have to understand. The edge in iron condors is not there. And we, you know, looking at this, what most people do is they do these trades when they learn to sell premium, okay? And they go out and they construct this iron condor. And they sell the iron condor, and the iron condor is way out of the money. And the very first time they do it, they make money. And they're shocked because you learn this trade. You went to some class, you paid $500, you learned to do a trade called an iron condor. And they learn the iron condor and they make money and they go, hot damn, this is going to work. Did you realize that the trade that you sold had a 90% probability? Of course it's going to work. Like that's what they're banking on when they sell you the class in the iron condor. They go, it's going to work. So the very first time you do the trade, you do it in a product called the spiders, because the spiders, it's little. It's a good learning product, right? So you do the trade in the spiders, you make money. The very next month, you come in, you do the exact same thing in the spiders and you make money. So that's 2 months in a row and you've been unscathed. The third month you step up and you go, squawking your feathers. You're like, you're not going to be a one contract trader in the spiders. Now you're doing a 5 lot in the spiders. You're like, yeah, you know, you got your little Captain Caveman like cape on. So you do a 5 lot in the spiders and you sell some premium. You know what? Month 1, you made money. Month 2, you made money. The thing expired worthless. Month 3, you amplified into a 5 lot in the spiders and you made money. Month 4, you're like, I'm ready, baby. We're going to the big time. So you actually move into a product instead of the spiders. Now you trade the SPX. And the SPX, it's the mother of all products. The SPX is also called the Widowmaker. So then you step into the SPX and you sell a 1 lot. Holy crap, you're in 4 months and you've made money 4 months in a row. On the 5th month, you step into the SPX. You don't do a 1 lot. Now you do a 10 lot, okay? By the way, 10 contracts in the SPX is the same thing as 100 contracts in the spider. And the market, the whole time, you didn't even realize the market's like, come on, come on. The market's actually baiting you into bigger and bigger contract size. Why? Because it's a 90% trade. 90% trade, yeah, I can always make money. So in the 5th month, you do a 10 lot in the SPX, and the market does what? Bam! Did you get the license plate of the train that just hit me? Trains don't have license plates. The market has baited you into this. You end up not only losing, everything in like that trade and everything you made in the previous 4 trades, but it also takes 50% plus of your account with it. The market, okay, is diabolical, evil, if you will. And whenever anybody hears this example, they usually, like, if they're sitting at home right now and you've ever done an iron condor, and I'm serious about this, if you've ever done an iron condor, people are looking at the screen right now, they're going, holy crap, it's like this guy could see it's like he could see my account. I could for 15 years. You think I haven't seen this before? Okay. This ain't news to me. Like, watching order flow is like watching this really, really bad movie. I was trying to explain that earlier, but it's like this really bad B-rated horror movie. You're like, lady, don't go in the closet. There's a guy with an axe in there. Of course, they go in the closet. Boom, dead. Okay. 5 minutes later, lady, don't go in the closet. There's a guy with an axe in there. You're like, oh, holy crap. And you're watching this play out from behind the screen. Okay. This is all wrong. Like 90% probability and the 10% hammer. Okay. People get completely wiped out. By the way, is anybody, does this remind anybody of any trading you've ever done? Oh, come on. Nobody wants to admit that one. Okay. Again, this is like, the 12-step program for traders over here. You have to understand to get this right and to sell premium right, you have to learn to exploit, okay, and poke holes in all the crap that you do. Did you really think that you're just going to be able to sell something in the marketplace and go, I sold something and I made money? Okay. Market's never going to give you. Market's never going to give you anything. All right. You're going to have to learn how to take it from the marketplace. Listen, after the people go to the $500 class and learn how to do the iron condor and they get wiped clean, they can't help but remember that they had 4 trades that worked. So then they go back to another class. They go back to another class. They go, I'm going to learn how to fix it. Okay. By the way, that is a very, very dirty path to go down. I do not like the fix. Okay. So the fix is a very dirty word. So again, all the time in the brokerage business, I am completely a cynic about fixing. I can't stand this. People come to me, they go, I'm not fixing the trade. They go, I'm morphing it. I go, it's still an amalgamation of crap, whatever you want to call it. If you look at like fixing a trade, you're going to bury yourself, because anytime that you're trying to fix an existing trade, like, people don't get it. Like, the market, it's always going to move faster than you could ever react. Like, do you understand that? People always tell me, I go, what's your risk management strategy? And they go, if it goes against me, I will get out. And I go, that is not a strategy. That's prayer. You ever woken up in the morning and the market's down so far, you're like, I'm toast. Welcome to the marketplace. Or even better yet, you wake up at 1 o'clock in the morning and you look at the futures on the phone in the middle of the night, you go, I'm toast. And then you're not sleeping for the rest of the night. Okay. Anytime you fix a trade, do you realize that you're adding more risk to an already losing trade? It's unequivocal. Like, there's no way that you can fix a trade without adding risk. Nobody ever actually thinks of it, but they don't call it fix it. They name it something else. They go, I morphed it. I, embellished the trade, if you will. Fixing a trade, more risk, more transaction costs. So I know commissions are free, but it's still more risk. Some fixes may work. The very notion of fixing a trade throws good capital after bad. You got to learn to throw that out like yesterday's trash. Like, people that try to fix trades, I'll give you the best analogy I've ever heard for this. This actually comes from a guy that I used to work for, and he used to say, take a car, drive it off of a cliff, and then bring that car to the body shop. And you go, well, hopefully you're not in the car. Take the car, drive it off a cliff, bring it to a body shop. What's the body shop going to tell you? They go, it's totaled. And you go, yes, it is totaled, but I would like it fixed exactly the way it was when I first bought it. And they go, okay, go buy a new one. And they go, no, you must fix this one. Even if you get that thing back, it's still going to be a pile of crap, right? It's the exact same thing for your trade. You got to learn this the right way. You got to learn position structure. You got to learn to sell options premium correctly. That's exactly what we're actually going to lay out right now. So when I talk about selling options premium correctly, there are going to be, okay, some absolute imperative ideas that we have to throw out to you. First and foremost, okay, I don't care if this is a stock. Listen, one of the first things that you got to understand, I am all about, okay, executing into the live markets. Forget about the QQQ for a second. Let's go back to the marquee. Here's the spiders. They are trading at what? 476, 477. That's fine. Okay. So one of the first things that we're going to learn is spiders. Okay. And let's actually make this example much more realistic. Here's the SPY. And the SPY is trading at 476. Okay. We're going to go out. When I say we, okay, you, me, all of us, we're going to go out and we're going to sell out of the money option premium. I can turn around and I can sell some what? 525 calls. I can sell some 530 calls. I mean, heck, I could probably even go a couple of weeks from now out and sell some 540 calls, but at the exact same time, okay, I'm going to sell, for instance, 350 puts. I'm going to sell some 330 puts. I'm just making a quick point. I'm not selling on one side of the marketplace. I'm going to sell on both sides of the marketplace. And I don't have to do one trade. One trade, you will learn, is one big disaster. Okay. Like if you think about this, and again, I hate to put this in the terms, okay? I hate to put this in terms like this, but if you were to think about this in like military tactics, your capital is your troops. You would never put all of your troops in one place at one time. Why? Because if the market comes cruising up there, you're gone. So you strategically place capital on both sides of the marketplace. But nevertheless, even after explaining all of that, what could happen to this marketplace? So I sell some out of the money calls and I sell some out of the money puts. Okay. And then I sit there and I go, I hope. I don't hope anything. Okay. I don't have to hope. Because what I'm going to do in a second here is show you how to mitigate risk. But what could happen to you in this position? If I just sell, let's tell you what, let's sell and let's just sell naked. When I say sell naked, selling naked, okay, implies unlimited risk. Do not worry about margin. I told you I'd take care of that. But you sell a bunch of out of the money calls and you sell a bunch of out of the money puts. I don't know what's not to say. What happens if the marketplace, you wake up, okay, and the marketplace, is right down here, okay? You're in trouble. You're in trouble because that market's going to move faster than you're ever going to be able to react. What happens if the marketplace rallies huge? What if? You have to cover yourself. You cannot survive the onslaught of risk. So how are we going to do it? Like, how are we actually going to go about and do this, right? Enter, okay, the hedges. Enter the hedges. We are going to use, okay, several what we term preemptive hedges. Whenever I talk about selling options premium, listen, the way that we're selling premium, okay, works. You go out 3 months, you open the position, you close it, you make 50%. You close it, you make 50%, close and make 50%. The issue therein, okay, is you're going to go month after month after month after month of profitability, but then you're going to get this wild, outlandish market move, and it is going to rip you apart from the inside out. We understand that, and we are going to use preemptive hedges. What is a preemptive hedge? Okay, it's a little bit, okay, of an outside hedge, and I'm going to show you what this means. We will use one of three hedges. Okay, so there's one, there's two, there's three. The first one is called a risk twist spread. This is also known as an RTS. We call it an RTS around here, okay? A risk twist spread. Number two, okay, is called a VIX vol spread, okay? Or VIX volatility spread, VVS. Number three is what we term, okay, a gamma iron. Those are what we call preemptive hedges. What does that mean? It means I have one on right now. Do I have one on right now? Of course I have one on right now. I have to have one on right now because I couldn't, like news could break right now, market could crash. I have no idea. News could break right now. World peace, COVID is over, all the stars align, okay? And you get Jerome Powell dancing in the streets, throwing money out. Wait, that already happened. Anyway, all of this happens at the same time. you're going to be hedged. Okay. And you're always going to have hedges on. Everybody's going, what are these going to cost me? Don't worry. I'm going to cover that. So again, the SPY is trading at 477. I'll get it right. It's trading right at 477. Do we own the spiders? No. Do we want to own the spiders? No. Are we ever going to want to own the spiders? No. Why? Because it ties at $477. So I'm going to go out. Okay. And again, I'm going to sell. Oh, what did we sell earlier? The 525 calls. Then I'm going to sell, for instance, some 540 calls. Before you know it, I'm going to be selling, for instance, like even 550 calls. This is what I call inventory. We are inventory managers. Okay, play hot potato. I'll be closing the 525s, open up the 555s. I'll be closing the 540s, open up the 560s. I don't care if we keep rallying, but at the exact same time, I'm going to sell those calls. You better believe I'm going to be out here working the puts, right? I'm going to sell 350 puts. I'm way out of the money in the puts because puts are juicy, people. So I'm going to sell those puts. And I didn't even talk about puts over here. I'm going to sell, for instance, the 340 puts. I might even be selling, okay, in this case, the 380 puts, just real quick. That's it. So I'm selling a couple out of the money calls and selling an out of the money puts. Okay, then what do? Most of the time, absolutely nothing. Because you know what? The probability of getting way up here or way down here, 95% of the time, nothing is going to happen. And I am not holding these positions anywhere near expiration. I'm in, I am out, I am on with my life. It is hot potato, inventory management. Make yourself the Amazon of the trading world. Inventory out, inventory out, inventory out. Okay, sometimes you're going to get a bad apple, meaning the inventory, a piece of inventory isn't working. Keep moving it. What are the preemptive hedges? I told you, sooner or later, you're going to wake up into an absolute pandemonium. Pandora's box of volatility will be opened upon you. Today, I select that I have on a VIX volatility spread. You go, what's the VIX volatility spread? The VIX volatility spread, what is the VIX? Everybody familiar with the VIX? It's the S&P 500 volatility index. Let me ask you something. When the market goes down, the VIX goes where? Up. We are going to lay on a very, very small trade on the VIX. That if the market crashes, the VIX explodes. If the VIX explodes, the VIX volatility spread will explode in value. The VIX volatility spread, okay, will be layered right into your position, right about here. That way, if this marketplace, okay, and I'm actually going to draw this in a separate color so you can see it. If this marketplace comes tearing down, right here is the VIX volatility spread, and boom, it's going to explode in value. And what it's going to do is it's actually going to put an umbrella over you, okay, to hedge those positions, okay? It's going to give you more than enough time if you had to exit them or just hold on to the positions. But the VIX volatility spread will be your savior, if you will, to the downside. It is a risk mitigation tool. People always say, when do you have those on? I always have them on. How much do they cost? Zero. I don't pay for VIX volatility spreads up front. In fact, I think it's critical. You know, as I said, this is no holds barred here. I know there's writing on the screen, whatever. I want the writing on the screen. Okay. We're going to go into the VIX. You're looking at my trade history in the VIX. These are VIX volatility spreads. Okay. See how it says custom orders? It says custom order, custom order. I know it's hard to read through here. Okay. Because I got all this other crap on the screen. Do you see that I'm putting the hedge on for a 5-cent credit, a 3-cent credit, 0, 0, 0? I am not paying for the hedge up front. Just wanted you to know that. So the VIX volatility spread is your savior, if you will, to the downside. And it is not per se going to cost you anything up front. Okay, so that's the VIX volatility spread. The exact same time, you can actually layer in what is termed a gamma iron condor. And the gamma iron condor will cost you a little bit. What a gamma iron can actually do, the risk graph will look something like this. Okay, if the market explodes higher, it catches actually your gamma iron and actually covers you predominantly the upside. It also gives you some coverage to the downside, right? Those are the two I'm currently using right now to mitigate risk. This is what selling options premium is about. Now, time out. People look at this and they go, it's a little complicated. It's going to take you a few days to understand this, but we run portfolios of all of this, right? Like we literally text people out the trades. Why? Because it's, initially like you have to understand this logic of inventory management. Whatever career that you got into, you didn't get into that career overnight and be like, yeah, I knew what I was doing. I was a heart surgeon. It made perfect sense to me. This is not a heart surgery. You have to learn a little bit about position structure. You have to learn a little bit about capital allocation. You have to learn how to circumnavigate margin. But do you think it's worth it? Absolutely. I'm telling you right now, you need to learn how to do this. You need to learn how to do this because it doesn't matter what you think about the marketplace. The Fed ain't got your back anymore. Okay, people, you need this in your life. Premium can be sold in small accounts, even under 5,000. You have to have $2,000 in your account to be able to sell premium. And I'm telling you right now, with $2,000 in your account, you can even sell naked. But you're going to have to learn how to use the hedges. With $5,000 in your account, you could actually do this in an IRA. Okay. In fact, I'm trading. In fact, here, look, this right here, right? This is the IRA. This is an IRA. So come over to my activity and you can actually see everything that I do. Oh, by the way, these are all filled orders. Okay. I'll get rid of all the other. This is everything that I filled. Okay. All IRA. So with that, all right, produces positive decay, may enhance existing positions. One of the things I didn't even discuss is you can actually sell options premium against existing positions, provides an incredibly high probability of success. You got to realize most of the time you won't even use those hedges. Most of the time you just kind of coasting through the marketplace like, oh, I'm closing stuff, I'm making money. I mean, this is like, it's like flying an Airbus. 99% of the time, nothing happens. That other 1% of the time, you're like, but that's what you have the hedges on there for. You never need to buy or sell the stock, and you can be wrong on market direction. This is much more of a quantitative trade. You could be wrong on market direction and still produce profitable trades. And I'm telling you right now, you need this in your life. You need it in your life because stock picking is not likely to work 2022 and on, right? You don't have necessarily the Fed at your back. I can give you 50 different reasons that right now, you're going to want to sell premium. And the best thing of this, the volatility just keeps getting better. Like we thought like, hey, this is working awesome. We started doing this in 2020, 2021. We're like kind of expected volatility to collapse this year. It hasn't. In fact, volatility's even picked up. Okay. It's on right now. This is the time to sell premium. Selling premium could potentially bring in consistent returns while minimizing your risk. You want to learn how to do this. You got to understand though the criteria, and the criteria is really, it's the nuts and bolts behind this. And I can't stress that enough. When I say criteria, it's the recipe. Okay. Before I actually get into criteria, this is going to be kind of cool. I actually have, here are a few live trading examples. So variations of all of the following trades can be done with as little as $2,000 in a funded brokerage account and can be done inside of retirement accounts, right? All I'm going to show you right now. First, a couple of primer trades, and then I'm actually going to show you everything I've did in the Ultima premium selling portfolio. Okay, the Ultima premium selling portfolio. And I'm actually going to show you everything I did for 2021. It's not a ton of trades. I'm going to run through it quickly, right? This is live premium selling. So I start by, when I say priming this, okay, I start by priming this. Just wanted to show you, what are you looking at? This is a Tesla short call, 83% return. Like that's pretty obvious. But what is this? Okay, this is a screenshot specifically from Thinkorswim. Okay, why do I show it to you in this way? I'll tell you exactly why. If I cruise over to Thinkorswim, this is activity in positions. So you can see everything I'm doing, right? You can see P&L in the day. So this is all my activity and all my positions. This is the account statement. I could show you everything I did in the spiders. Here, let's go back. Like for instance, I can show you everything I did in the spiders for the last 360 days. Okay, so we're going to go back 360 days. Whoops, let's go into the spiders. All right, this gets a little bit confusing. So you can see custom open, close, to close, to open, to open, to open, to close, to close, to close. What I did is I just screenshot from Thinkorswim and I just plugged it into here. I just plugged it in my slide deck. So this is the opening position, the closing position. Every single position I'm showing you here is, again, part of the Ultima, okay, premium selling portfolio. This is a portfolio that each and every one of you can have access to. And you can watch it. I'm selling premium. Listen, The exact portfolio right now, if you're kind of interested in this, if I go to my activity and positions, I mean, it's a slow day today, so there's not much going on. This is it. This is the TheoTrade portfolio right here. Okay, this is everything that I happen to have on in this particular portfolio. Okay, at present time. I also have a little bit more upbeat portfolio for those of you that are a bit more experienced over here in Tastyworks. So I'm actually obviously working a couple of orders in here as well. With that, let's get to it. So here's an opening position. We're actually sold Tesla calls, closed Tesla calls, sold them for $3.90, bought them back for 65 cents, 83% return. I'll show you again on Tesla, just opening and closing orders. Show you again on Tesla, just opening and closing orders. Now, I'm just showing you Tesla because I want you to understand that this can be done in equity products. But my mainstay, like what I do the most, I'm an index kind of monkey. I like bonds. I like index products. So this is the inception of the portfolio. Here's a bond short put. Some people go, I don't even know how to trade bonds. It's okay. It's okay. So you can actually here, sold it for 14 ticks, bought it back for 6 ticks, 57% return. Another bond short put, 53%. IWM short call, 62%. IWM short call. All I'm doing is just running trade by trade by trade by trade by trade. It's just inventory. Okay, I don't care whether it's IWM, 53%, Tesla, 76%, SPY short put, 50%. Again, I'm starting to move into the second month, 51%, 57%, 49%. Again, we're in the spiders, we're in IWM, we're in bonds. Spiders, 50%, QQQ short calls, 62%. Every trade, every time, every date, okay, is all just logged in here. I just wanted to take you through everything I've done. QQQ, 53%, 50%. 50%, 64%, 53%, 57%, 56%, 50%, 54%, 19% loss. It had to happen sooner or later. Okay, 54%, 52%, 49%, 47%, 49%, 51%. And again, we're now only in March. 54, 51, 50. I'm ripping through bond short put, IWM short call, IWM short put, IWM short put, bond short put, 53%, 73%. Okay, we're only in what, April here, 56%, 52%, 50%, 53%. Again, every single trade, bond short put. Okay, Tesla short call, I threw another one in there. QQQ, 54%, Amazon short call, 63%, 50%, 53%, 51%, 50%. Okay, 55%. 51%, SPY short call, 51%, 50%, 52%. Timeout! At this point, okay, I started running the live portfolio. When I say the live portfolio, it's like no holds barred. I will show you absolutely everything, balances, full account statements in here. But at this point in the portfolio, we're almost halfway through the year because you can see here I am in obviously in the April-May timeframe. And I decided to actually move into the S&P options on futures. And the reason that I moved into S&P options on futures, one S&P options on futures is the same as 5 contracts in the spiders. So I felt that everybody at this point was up to speed on obviously selling premium. Instead of the nickel and dime stuff, we actually moved into a slightly larger product. And so here we are in the S&P options on futures, which some people are not familiar with, but it can really be. It's a phenomenal product. It's extremely liquid. So you'll see almost every trade from this point on is ES, QQQ, ES, 51%, ES. Okay, and I'm ripping through bonds, okay, SPY. By the way, once in a while, I'll still trade the spiders in here. Bond short call, QQQ, more QQQ. This is then another evolution. So as I actually walk through this portfolio, okay, when I say walk through the portfolio, so I'm opening and closing trades, and we're actually texting these trades out and everybody can see them. So the first step is to obviously get you in motion and actually selling premium and buying premium back for 50%. The second phase is to actually start to scale, right? So we went into the S&P options on futures. Okay. The third step in here is to actually go into a little bit more intricacy in terms of the trade. So this is actually called a Christmas tree trade. And the Christmas tree trade, these are done for very, very large credits. Okay. They have extraordinarily low amounts of risk. All right. So you sell them and buy them back. This is an 85% return. Now, this one's up the food chain a little bit, and that's okay. Each and every one of you now, you can do Christmas tree trades. You don't even have to do them in the spiders. There's a bunch of different products you can trade these in. Okay, QQQ, All right, TLT. So I'm trading a couple of bonds over here. ES 55%, SPY short call 19%, 57%, SPY short call 50%, 54%. You know, I'm just ripping through ES short calls 58%, 63%. Here's another Christmas tree trade for a 92% return. Okay, here's a 52% return, a 52% return, a 53% return. Like, listen, I just took you through like, you know, month after month, but you'll start seeing as soon as the Christmas tree trades come out, the Christmas tree trade is the mother of all trades. You have to actually trade less with a Christmas tree, trade less, okay, but it does so much more. You'll see in the final quarter, of 2021, the Christmas trees pretty much took the cake. I mean, this thing, huge credit. So you're actually bulking some of the order flow together and doing the trade as one big batch. By the way, I'm taking you literally into trades that I've closed just a couple of days ago. And right now, you know, said like, oh, well, what else do you have on? Showing you exactly what I have on. Right now, I got a lot of inventory. You know, it's a decent amount of inventory on over here. And there's a Christmas tree in here as well, right? So the Christmas tree covers a huge amount of trade. I'm telling you right now, this is the time to learn this stuff. It's what better time? Right? I mean, most people are still working from home. Some people are even back quarantined right now. This is a great way to come out of this, all right, emerge in better financial shape. So we're not teaching, you know, something that's going to be over your head. Each and every one of you can learn how to do this. You are going to have to spend a little bit of time just getting down structurally what we are doing, right? Again, what our members are saying, Kevin said, absolutely love this freaking website, TheoTrade. There's so much here, so many different flavors. Cannot pull away for more than 15 minutes. I cannot get any work done. I could go on, but here comes the short I'm waiting on. You know, Stefan said, I really think Theo is the best educational money I ever spent. I throw these out. They come from different time frames and so forth, but no time, not a much of a problem either. I don't want you to think that we're sitting in front of the computer all day. Sell some premium, get back, reduce risk. Each trade that I'm showing you here today was actually displayed live at TheoTrade. Okay, the trade results they're not, you know, hands-on sitting in front of the screen all day. This is extremely part-time. You're going to sell premium. You can even use set and forget, what we term GTC, that's good till canceled orders, to exit. Even a fraction of your time is going to be enough to see some strong results. And I throw this out here because we still have a large faction of clientele here at TheoTrade that do not sit in front of the screen all day long. Like, I don't think you have to sit in front of the screen all day long. I just want you to understand that right now. But learning it, yeah, you know, you're going to have to take a couple hours to do this. Listen, some of the characteristics of selling Ultima Premium, okay? Some of this is undeniable. You never have to buy or sell the stock. The risk, you're actually fine tuning it, you know, to precisely your comfort level. You don't have to use a stop order. You can vary time frames and actually minimize risk. And I'll explain that a little bit more, but the probability of profitability is extraordinarily high. It's a perfect strategy. Like, maybe you have a portfolio of stocks. You can actually use Ultima Premium selling techniques against stocks that you own, or short, long or short, okay? This is also an excellent tool for those seeking returns to build a smaller account. So new products, and I've been reiterating this the entire time, new products allow for the sale of options in nearly any account size. $2,000, you can do this. Building a portfolio of options. Here's the part where, once again, I say, don't let the options portion of this intimidate you, okay? You can sell premium for minimal credits and initially minimal risk, but the sale of premium, like, this is a major power saw. Right? You got to go out and you got to actually spend, you know, some time. You got to learn how to the position structure. You know, when I say the position structure, it's the same thing. Like, you know, if you're going to build a house, you can go out there and use a handsaw and cut every single 2x4, you know, by hand, or you use a power saw, right? The power saw is going to be the quickest, the fastest, the safest, the easiest way to be able to build that house. I'm telling you right now, if you don't know how to use a power saw, you'll lop off a couple of fingers. Options are the same thing. Options will be the quickest, the fastest, the safest, the easiest way to get where you want to go in this business. But you will have to learn a little bit about using them and using them correctly, right? Okay, don't let that intimidate you. You can sell Ultima Premium and minimize risk, right? You're going to need, and this is something that I emphasize, you're going to need these strategies for the foreseeable market future. Because if you have not yet noticed, all right, just give you a quick glimpse of this. For the first time in a very long time, the Fed doesn't have your back. Bitcoin isn't raging to the upside. You know, Nvidia and Tesla, okay, and any of the mem stocks, they're not flying. There's no more game, stop. There's no more, AMC, right? Hoarding and trying to move stocks, it's over. It's done with. Okay, you're gonna be in a very volatile marketplace in the foreseeable future. There's no question. We're looking at 3 rate hikes in 2022. Doesn't matter whether you believe that or not. The market, okay, does. And again, without the Fed at your back, and what's that going to do to stock buybacks? It's going to make this business absolute pandemonium. You just sit back and sell some premium, just let it roll in. Again, the one thing you got to understand, if the market starts to get volatile, I mean just hectic, that is a very good thing for premium selling. You want, okay, that volatility. Again, open Pandora's box of volatility. Bring the pain to the market because that's going to bring the premium to the sellers. TheoTrade creates detailed recipes for every strategy, okay, including selling Ultima Premium. And the way to think of this, like, these detailed, like, recipes, this criteria, it's like baking a cake. You could follow a recipe. I think pretty much any of you could bake a cake if you gave, like what, 8 or 12-step recipe, you could probably walk through those steps and be able to bake a cake. Trading's the exact same thing, right? We're just going to walk you through like, hey, step 1, this is what you do. Step 2, all right? This is what you need to know to successfully sell Ultima Premium for a living. And when I talk about criteria, this is what criteria is about. What underlying stocks or indices make the best Ultima Premium selling candidates? Well, you looked a moment ago, you saw spiders. You saw S&P futures. What else did you see? You saw a little bit of Tesla, maybe a little bit of Amazon in here. I think there was one Mo put in there. The IWM, the QQQ. When we talk about selling candidates, like, or which premium selling candidates, it sounds pretty easy. He uses the spiders, he uses the IWM, uses the QQQ, then he uses the futures contract. So like, I got this. And then you realize, what volatility should I seek out? You're like, I don't got this. There is a very finite area of volatility. We want good volatility, but not too much volatility. Too much volatility could be the death of any good premium seller, right? So we got to seek out the right volatility. Then we got to learn to what options expiration do I select? Look at an option chain right now. Like, here's the spiders. How many options there are? 0-day, 2-day, 5-day, 7-day, 9-day, 12-day, set, hut, hike. We go further out in time. There's 106-day and 92-day and 79-day. Do you see? Look, I got positions here. I got positions here. I got positions here. Like, I'm spread on the line, right? Should I go out to May? If a lot of time is good, why not go out 170 days? You have to know precisely, right, the finite time frame to fit in. You got to know the options expiration. You got to know the right volatility, okay? What should be the delta of the option I sell? Delta, probability. So what we're going to do is we're actually going to tell you not only the right candidate, which is the symbol. Let's say it's the spiders. Then we have to tell you which volatility to go after. We have to actually look at which expiration cycle. Then we got to actually go in there and calculate the right delta. You're like, I don't even know what delta is, man. Couldn't be easier. You go, it's the rate of change of the option for every dollar move in the stock. Yeah, forget that definition. Throw it out the window. It's not going to help you here. We're going to tell you exactly what to sell, right? Then we're going to tell you which options to buy. That's the hedges. Bring on the hedges. What's the VIX volatility spread? Which VIX volatility spread should I use? And then how many VIX volatility spreads do I buy? How many VIX volatility spreads do I use versus how many options do I sell? Oh my, how do I build the position? That's what that means. Like, how do I actually put this together? Do I need a large amount of capital in my account to do this? No, and you can do it now in an IRA. I'm doing this in my IRA. What is the right amount of risk for me? How about we can fine tune that? We use what's called a risk array, and you can say, I'm willing to put up X amount of capital to generate X amount of premium. We can help you with that. What are the percentage returns supposed to be? That one's easy, okay? What are the percentage returns supposed to be? Anybody? What's the percentage returns? What was my most common percentage return? Couldn't have been easier. The number is 50%, right? How do I protect myself from market crashes? That's the VIX volatility spread. That's a risk to a spread. That's the gamma iron condor. Let me show you exactly what we do here at TheoTrade. TheoTrade creates recipes in trading, right? And those recipes in trading is all about, okay, answering the what ifs. When I talk about like recipes, it's like, well, that's really great. We can get you into the trade, but after we get you into the trade, what if? What might be a good stock or ETF candidate for you to sell premium, right? What's the correct options expiration cycle? How much capital do you commit to generating premium? What strike price options do you sell? What options do you buy? How can I limit my risk? We have those answers. We build recipes with definitive criteria. They're checklists for each strategy and each unique variable you're going to encounter. By the way, let me give you guys like the logic of what criteria and TheoTrade checklists really are. Okay. So early on in my career, very early on in my career, I flew around a lot. First of all, I flew around because I was living in Scottsdale, Arizona and working out of Chicago. I was on a plane nonstop. And then I went all over the world and did classes for both Thinkorswim and TD Ameritrade, literally all over the world, all over Asia and Southeast Asia and, Australia. Okay. You pretty much name a place and I've been there. So flying around the world a lot, you get in a lot of aircraft and in these airplanes, I used to just sit there and I'd like watch. I'd always watch the pilot. I always sat up front because I had a million miles, pretty much legitimately a million miles. And I'd watch the pilot, and these pilots would go through, and this is back in like the late 90s, they go through like these detailed checklists. They literally sat there and they go, yes, this is on. They look up. Okay. I mean, they even walked outside of the aircraft. It always made me feel warm and fuzzy to know in my Boeing 737, they'd be like pulling on the engine outside. And I always laughed at that. I'm like, that guy pulls on the engine and anything happens, I am out of here. Okay. But those detailed checklists are where I started to build, and construct checklists for everything I did in trading. And this is before like, I started bringing this to clients and so forth. But I started to have, people talk about like criteria, but I started to build like really finite checklists for myself to where, it wasn't just about getting in the position. It was about getting in the position. It was what if the stock goes up? What if the stock goes down? What if expiration is coming? What if there's a dividend payable? What if? Okay. The criteria that we have brought to TheoTrade, the criteria that we have constructed is just that. The criteria is about unique variables. Like, again, you go through this pre-flight checklist, you take off in the plane, like nobody gets into an aircraft and goes, throttle up, let's go. It's not like getting in a car. And then once the pilot goes through the whole checklist, okay, he or she is actually in flight. Most of the time, they don't look at anything. Once in a while, they run into a couple of bumps in the road, and then they're like, "Oh, checklist! What are we doing?" Okay, and that's how they're taught to basically fly. That's how we trade. I mean, TheoTrade has the answer to the questions. We'll give you the right probability. How many option contracts for the account size? When do you close the premium sale? What if we sell off big? Do I bail out of the trade? What if we rally massively? Can you fix losing positions? We get into like the how, the when, the why. And I'm telling you, it is just the beginning. We're just scraping the surface right now of talking about the variables that are involved and that you will face when selling Ultima Premium for a living. You can read about what selling Ultima Premium is like right now. And I don't mind saying this. People like look at this and they go, I'm going to Google this. You can Google selling Ultima Premium. 10,000 different pages are going to come up about selling options premium. You're like, yeah, okay. Maybe you've even built a few trades. What it doesn't give you, okay, and what all the Google results are not going to give you is the finite criteria. And this is what we are about. We're about finite criteria. Again, I gave you a huge amount today where I'm like, well, we're out there, we're selling premium further out in time. But then selling premium is only a portion of this. Once you've learned to sell the premium, you got to learn the other side of the business, which is risk management. And the risk management, okay, is every bit as critical because bringing in premium is going to work 95% of the time. It's that other 5 or 10% of the time that you have to worry about. And that other 5% of the time, it's critical to be able to keep those gains, to be able to lock those gains in. Listen, you need TheoTrade's recipe for success. 20 plus years trading experience. That's just me. I had access to client order flow for 15 years. We have viewed and studied millions of trading accounts. Okay. And I ran education at Thinkorswim and TD Ameritrade for 15 years, a firm with the largest option order flow. Like bar none, that's where this criteria stems from. Okay. Criteria is your recipe for success. The following strategy and the corresponding criteria requires the utmost attention to detail. We've literally spent years, specifically with Ultima trades, we spent years fine-tuning this trade setup okay, and the criteria. And when we approach the section on criteria, you simply follow the steps to be able to build a trade. We built full-blown 5-hour course on this. It's the Ultima Income Generator course. Now, before I throw anything up there, everybody looks at the $500 like, oh no, it's another class for $500. We don't do that here. I'm going to explain what that means here momentarily. But, okay, before I do, listen, I am the trade instructor for the Ultimate Income Generator course. We have 7 other full-time instructors here at TheoTrade. We put together a 5-hour course. Okay, the course is archived. What we do is we record the course, we clean it up, we archive it. And when we say archive it, we make it available to stream 24/7. Now, TheoTrade is set up exactly like something like Netflix would be set up. You come into the site, click go, it starts streaming the class to you. But you're also able to download the class, meaning that when you're like, what do you mean download class? You can download the class. In fact, we even have accessibility for, okay, all of your mobile devices. So we actually built a application. There is a TheoTrade mobile application for both iPhone and Android, right? Where you could actually view the classes, all right, view everything in there. You can even download it and you could, theoretically, you could be in an airplane. Not that anybody wants to go anywhere right now, but theoretically, you could be in an airplane at 30,000 feet and have no internet connection and be able to stream the class, all right? Because you've already downloaded it. You're not really streaming it at that point, or you can just grab it from our website at any point. Again, the class slide deck that has all the entry and exit criteria, we put it in a PDF format. You just download that, that's yours, okay? But before I go any further, okay, I want you guys to understand something, and I'm gonna give you the course curriculum, like what does this course cover, okay? The one aspect that I want each and every one of you to understand, what we do here at TheoTrade, we do not sell classes for $500, okay? TheoTrade gives you everything that you're going to need in this business. We do classes, we do coaching sessions, we will give you email access to myself and all the other instructors. When I say email access, you can literally email me after today. All right, email me, you can bounce ideas. Most of us come from the professional trading world, either market makers and or the brokerage world. We've answered tens of thousands of emails. You can ask direct trade related questions to us. Okay, there's no if and or but about it. That's okay. It's par for the course around here, right? In addition to it, we text out trades, right? So these trades, and you're like, I don't have text messaging. We do push notifications. Okay, so that's if you're anywhere overseas, you can get push notifications through our mobile device. We built all of that. We give you a chat room where you can actually discuss trades with us directly or with other clientele. We also stream, okay, live every single trading day, every minute of the trading day. We have different genres of trade, and we give you access to every course that we've ever done. And I'm just foreshadowing right now because I want you to understand, we do not sell a la carte classes for $500. That's not our business. We try to give you everything you need to trade, everything you need to invest, okay? Every support point that you're ever going to need, right, in the future. And if there's something in this business, okay, that you don't have, okay, we'll get it for you. And that's what we built, is like this all encompassing. And that comes simply from the fact that, again, I ran education over at Thinkorswim and TD Ameritrade. I've seen everything. I see all these other classes, and these people sell you a class for $500. Then they sell you an indicator for $500. Then you got to take a class to learn how to use the indicator for the original class. And before you know it, that's all obsolete. And then there's another class for $500. We don't do that. Okay. We don't do that. That's not what TheoTrade is about. If you're serious about this business, listen, we have 6,000 plus clientele. Okay, we don't do memberships. We don't do any of that. You want to be into TheoTrade? You can come in, you can check it out. Now, let me get to the course curriculum. Then I'll talk to you guys a little bit more about what TheoTrade really incorporates, like what we have here, right? So this is the class that, I emphasize right now. We give you access to a lot of different classes, but the Ultimate Income Generator course curriculum, you're going to learn how to generate consistent returns, okay, with this selling options curriculum. So obviously you're going to learn portfolio structure, high probability trades that are going to generate consistent monthly returns. Okay. Starting capital is not going to be critical. There's actually a section of the class that even covers small accounts. You're going to be given detailed entry and exit criteria. All right. And that entry and exit criteria is literally the checklist. We're going to talk a little bit about option Greeks, not to scare anybody, okay, and how to manage your positions through one number. It makes it a lot easier. You're going to learn to use a risk array. A risk array is like playing the game of chess in the market, where you can actually see, what if we go up? What if we go down? What if we go up huge? What if we go down huge? You're going to see and figure out what your profits are and what your risk is before the markets ever move. You're going to learn how to properly allocate in a way that reduces risk. So allocation is not, I have money, put it in the market. Okay. This is not YOLO and throw market money at, we're going to learn to allocate efficiently to minimize risk, right? And to actually keep the stress down of managing the risk. You're also going to discover risk mitigation techniques designed to hedge even the most extreme market environment. That's like the VIX volatility spread and the risk twist spread. You're not going to get caught off guard, okay, by whatever happens to the market. You're going to learn how to sell premium in small accounts. As I said, small accounts and retirement accounts. There is a subsection of this class exclusively for smaller accounts, $2,000, $5,000, okay, with an innovative new trading vehicles that have never been available before. This is what we do, and this is the course curriculum, all right? And that's what we do over that 5 hours in the course, okay? Now, on top of it, TheoTrade, it's a completely riskless trade. And I throw this out here immediately because we say kind of put our money where our mouth is. 90-day money back guarantee. So you can enroll for TheoTrade today, right? Anytime in the next 90 days, you don't love it, if you're not satisfied in any way, you don't have to call us. You don't have to do a song and dance. Just shoot us an email. It's the same email address for everything. support@theotrade.com, full refund. No questions asked. There are no stipulations. We removed it. The stipulations are ridiculous. Like, forget all that. You don't have to give me an excuse, no questions. Listen, we want people here at TheoTrade that want to be here. We have 6,000 plus clients right now on the TheoTrade platform. It's imperative that you guys understand that, okay, there's no excuses, no questions, no commentary. Just email us, ask for your money back if you want anytime in the next 90 days. You can enroll for this at theotrade.com/skew, okay? And I'm going to throw this up here briefly so that everybody sees it. And then I'm going to explain a bit more about TheoTrade. Okay. Again, if you take a look, you just click add to cart. One aspect I want to show you in here, again, it's completely riskless trade. First name, last name, enter your phone number on the enrollment form, enter your phone number. Okay. If you would like text messaging, you do have to enter your phone number on here. So I just wanted to throw that to you. Again, the web address for it is theotrade.com. S is in Sam, K is in kick, E is in echo, W, theotrade.com/skew. Now, again, each and every one of you can review the money back guarantee on there. Again, no questions asked. Check it out for the next 90 days. This is what we actually fully incorporate in TheoTrade. When I say you want a bonus, okay, it's just part of TheoTrade. TheoTrade goes beyond one class or one indicator. Okay, like we get that people want everything. They want everything to trade. They wanted everything to invest, and they want it at one place and at one price. The first bonus is a quick start beginners video guide. So if you've never put a trade on before, and I'm actually going to show you what this looks like. If you've never put a trade on before, like have no fear. If you've never put a trade on before, we have an entire start here menu. Options 101, options 201, options 301. Like, what are all of these? Okay, you want to see you want to see how it works? Just come in here and click on one of them. Like when I say click on one of them, preparing for your trading day, order execution, part 1, 2, and 3. I don't care how experienced you are. Order execution, I spent 15 years in the brokerage world. You'll learn how to get better fills through better order execution, right? What products to watch and why. But when I say like, what are these? Just click on one of them. When you actually click, okay, on the video, it'll bring up a page, right? And in this page, you can start playing the video right here. Literally start clicking on the video and play it. That's it. Okay. And you could do this also in mobile as well. But I want each and every one of you to know that there is a start here menu. And that's the first aspect that we give you, that absolute novice to most extreme trader, the quick start beginner's video guide. All right. We're going to give you training that'll take you from complete newbie to entering into your first trade. Bonus number 2, we also give you access to over 100 trading classes. Basically, the inception of TheoTrade. We started TheoTrade. I left TD Ameritrade in 2015. We launched TheoTrade in January of 2016. Okay. The baby's having a birthday today. It's almost TheoTrade's birthday. Anyway, you get access to every course that we have done, okay, over all the years. So we're coming into, the 6th and 7th year of TheoTrade. Again, we're about to turn. We're getting older. Every class that we've done and every archive from inception. And if you're kind of curious, like, we do everything from Ultima Income Generator, right, to Guide to Small Account Growth in-out spreads. It's probably the most prolific class we've ever put together. Volatility back spreads, how to collect income being short, risk twist spreads, covered calls, day trading NASDAQ futures. We cover every genre of trade, pairs trading, okay, you name it, it's in here. In fact, if you're kind of curious what the archive looks like, all right, let's come back over here. So here is the TheoTrade class archives. We have option classes, newbie classes, technical analysis, bonds, stocks, day trading, hedging, trend trading. Okay. We even have mindset. So we have an in-house psychologist. Some of the classes are phenomenal that he does at Slim Miller, right? But if you're curious about like option strategy classes, that's my baby. I'm the options geek here. Income Accelerator, Ultima Income Generator, tracking unusual options activity, gamma irons, controlling your risk, back spreads, volatility crash course. Go down a little bit, right? Maximize returns with infinity spreads, right? Fruit fly, durations like irons, in-out spreads, right? Again, the class list is bar none. You could go out and you could spend like $30,000 in market education. It will pale in comparison to what we give you here. This is all part of this. Like, you enroll today, it's part of it, right? And you get to start accessing these. There's no risk. Whatever, you get the next 90 days. Just check out as many classes as you want. Bonus number 3, okay? It's an all access TheoTrade VIP membership pass. You're like, what is this? This, okay, is access to a live chat room where we're streaming live. And you're like, well, what does that look like? Well, again, we're live right now. Why not show it to you? So if you're kind of curious what it looks like, here, when I say that we're live right now, I mean it. Okay, we're live. And
which was a homework session.
So you're actually hearing Tony Rago. This is Tony Rago. This is our intraday trader. This is for somebody that really does want to sit in front of the computer throughout the course of the day. Again, we have different genres of trade. So if you take a look down over here, you can see these are all our clients. So that's the actual chat room where you can talk to other clientele. Up top is actually the instructors. So this is streaming to you live. You're seeing their platform. We execute live trades throughout the course of each and every session over here. We also have access to 5 different portfolios. We do text and push notifications. We have daily coaching sessions. Okay, it's all part of it. It's like another $1,000, in value and insight. It's just part of TheoTrade. All right, here's the instructors. We have Jeff Bierman, Matt Williamson, Corey Rosenblum, Brandon Chapman, Steve Miller, Tony Rago, Blake Young. All right, Jeff Bierman's also a professor of finance in Chicago at DePaul. Okay, he actually does a lot of our continuing education here. Matt Williamson, market neutral premium selling strategist. Corey Rosenblum's our resident swing trader. By the way, Jeff Bierman's a CMT, Corey Rosenblum's a CMT, and Brandon Chapman's a CMT. You can go to major investment firms and they may not have 3 CMTs on staff. We have 3 of them. Okay. By the way, Jeff Bierman comes from both TD Ameritrade and Thinkorswim. He helped actually build the TD Ameritrade or Thinkorswim charts. Brandon Chapman actually comes from the education side in, of course, both Thinkorswim and TD Ameritrade. Steve Miller, 43-year veteran stock options and futures trader. Tony Rago is our NASDAQ futures trader, and Blake Young. Blake Young also comes from Thinkorswim, TD Ameritrade. He's into market profile, futures, currencies, and commodity trader. Everybody has their own genre of trade. This is just some of our crew kind of working from home throughout the course of this year. All right. It's a scary crew. There's Blake Young. All right. You also get access to 59 proprietary indicators and scans. The auto expected move. That is something that we are going to give you today. As I said earlier today, we use that indicator constantly, just incessantly, right? S&P gravity points, TheoTrade, RSI, Laguerre, Quantix, NQ levels. What I'm showing you here, these are proprietary scripts that we've written. We give them to you from day one, all of them, okay? TheoQuant Sizzle Index, SPX expected move, that gets updated every single week. Bonus number 4, TheoTheta Live portfolio. The TheoTheta portfolio, that is what I have been discussing. Like the trades that I was showing you earlier, the trades I'm showing you earlier, right here. This is all part of the TheoTheta portfolio. You get to see the TheoTheta portfolio, and you get to see what's called the TheoTheta small portfolio. So there's a big portfolio of bigger accounts. There's a small portfolio for smaller accounts. It's completely no holds barred, okay? You get to see everything we do. Full disclosure, all trades, opening and closing, hedging positions. They're my trades, they're my accounts, it's my capital. Discuss positions like you've never seen before. And again, we also have TheoTheta small portfolio. That's accounts for like $2,000, $5,000, $10,000. Okay, you can follow the smaller account. This is all part of TheoTrade so far, right? So we give you all the classes, we give you the chat room. Okay, we've actually got TheoTheta Live portfolio. This is actually what the Ultima TheoTheta portfolio looks like. We just literally show you what the trades are. We also do a weekly video. So some of you are looking at this right now and you're thinking, this is way too much. I don't have time for this. We do a 12-minute video on Fridays, 12-minute video on Friday. In 12 minutes, we update you on every move that we have made throughout the course of that week. If you cannot tune in live, I'm telling you, just watch a 12-minute video. None of these trades are like timing specific. We're not getting in, getting out, getting in, getting out. We're selling premium. And we're sitting there for 30 days and predominantly doing absolutely nothing. By the way, I will reiterate also once again, with this update, okay, and with the portfolios, you have email access to us. Like that is worth TheoTrade alone, to be able to actually shoot somebody an email and say, am I doing this right? Bonus number 5, technical analysis toolkit, Tech 101, Tech 201, MACD indicators, time-based trading. There are 21 other technical analysis classes. I'm not the chart guy, but we brought in, okay, the absolute experts in this industry, specifically for chart and technical analysis. Bonus number 6, the day trading treasure chest. This is for people that do want to sit in front of the computer all day. We have NASDAQ futures trader. Okay, we have an ES futures blueprint. So Corey Rosenblum and Tony Rago, both, one is a swing trader, one is actually an intraday trader, consistent intraday strategies and setups. All of these classes are part of this. And again, we support the classes throughout the course of the day in the chat room. Bonus number 7, mindset mastery. Now time out for a second. I'm dead serious when I say this, write this down. The 5 essential building blocks to successful trading with Steve Miller. I stress to each and every one of you this, okay? I don't care how long you've been in this business, where you come from in this business, this will change the entire way you actually view this business, okay? Steve Miller has forgotten more about market psychology than most of us will ever know. Seriously, I traded for 20 years before I actually watched this class. It's absolutely phenomenal. I don't put that much emphasis to somebody else's class. I am telling you, watch Steve Miller's class. When that class first came out, we're like, we just can't give this as part of the package. We started initially charging $1,000 just for the class. And we're like, you know what? Every single trader needs to see this class. I'm serious about this. Every single trader needs to see this class, okay? It's the mindset mastery. It's part of TheoTrade. Bonus number 8, quick start guide to Ultima trades. What this Ultima trades quick start guide actually does, it's like you opened up, a brand new, iPad. There's like a quick start guide. I don't think an iPad even has that in there. But anyway, you open up, a brand new piece of technology. There's a quick start guide. We built a quick start guide specifically to being able to sell premium. And that's something that we give you as one of the bonuses in here. One of our members are saying, this actually comes from Jeremiah. My first 4 trades following exactly the details of your Ultima class just closed out using GTC, that's good till canceled orders, right after getting into the trade. This paid for your class in less than a week. I'm very thankful I subscribed to your services. Keep up the good work. Thanks, Jeremiah. Listen, we include everything you need to invest in trade. We do classes, we do coaching, email access to the instructors, right? Again, you can email us anytime. Like, don't, take that for granted. Live trading room and live trades, indicators and scans, and we give you mobile access. It's everything you're going to need in this business to succeed. We literally built, like, TheoTrade is the Netflix for traders. It's $297 for 3 months. That's it. And by the way, I want to make this very, very clear because there's going to be 100 questions that come up here. First of all, you can enroll right now for it. TheoTrade.com/skew, right? SKEW, TheoTrade.com/skew. It's $297 for 3 months. This is not, and I just want to make it really, really clear, that's not an introductory price. We don't do that. It's $297 for 3 months. This is not a membership. You pay $297 for 3 months. What do you do after 3 months? If you want to do it again, you pay $297 for 3 months. Okay. It's like literally that easy. So I don't want anybody to think like, this is not like a gym membership where they, put the handcuffs on you and you have to give blood to be able to get out of the membership. It's not a membership. You sign up for 3 months. If you want to do it after 3 months, it's $297. Like, we get that life circumstances get in the way. Somebody's like, I'm taking the summer off. Cool. See, after that, we have over 6,000 clientele. And I don't really call them members. This is just 6,000 clientele. Come and go as you please. It's 3 months. Okay. The Ultima Income Generator course, it's available immediately. And we give you access to 100 classes, new monthly classes. We even have the candlestick trend trading system, something I hadn't discussed. This, right, is one of the most recent classes that we've actually done. It's actually a class specifically from Blake Young. It's a really, really big hit, but that is actually part of the new monthly classes. We have a live trading chat room, 59 indicators and scans, all right, text and push notifications, daily coaching sessions, all right, and instructors directly answer your trading questions via email. So you can enroll for it right now. And I'm going to answer a couple of the questions here momentarily. I want to reiterate one more time, okay? We have a completely riskless trade. It's a 90-day money-back guarantee. And we do this because, again, we want to make it a completely riskless trade. Like, I think it's pretty self-explanatory. You get access to everything that we just showed you for the next 90 days. If you don't like it at any time during the next 90 days, just get a full refund. Like, again, I reiterate, we want people that want to be here, that want to learn this business, that don't have that pressure of always having like the next class that they have to buy for $500. Like, that's not what we are about. We're comfortable. Okay. We have 6,000 people that are on the platform right now, and again, there's a money back guarantee. There's no stipulations to the money back guarantee. There's no excuses, no questions. And if you receive a refund, keep bonus number one on us. And what's bonus number one? It's the quick start guide. Like, bonus number one is the options 101, 201, 301, 401, 501. Like, we actually give you that even if you get a refund, because again, I think everybody needs that. Like, everybody needs, that novice to the extreme to get worked into this business. So there's 90-day money back guarantee. Get into TheoTrade now. Now, we do open up today. There are 30 spots on the TheoTrade riskless deal. We do this specifically to incentivize you to enroll for TheoTrade today. We give you 30 spots, okay, specifically on the riskless trade. So, and that's also, I always say this, it's also a matter of size. We don't mind answering a few hundred emails a day, but again, to incentivize people, we'll take 30 people on the riskless trade deal. We give you unlimited email mentoring, which I don't think anybody else does in this business. I could be wrong on that front, but we give you unlimited email mentoring. And again, I stress this because for $300 for 3 months, you email us once or twice. If I can save your bacon one time, I think it's not worth $300. Okay. Of the 6,000 clientele that we have here at TheoTrade, I always argue that 2,000 of them, okay, just they look at the text trades and they look at the text trades and they email us, and that's all they do. And that's fine. They don't even tune in necessarily to the websites, to the classes. They just want the trades that we're doing, okay? And they want to be able to email us and bounce ideas off of us and so forth. That's fine, okay? We understand that what we do here at TheoTrade is a little bit overwhelming, but it doesn't matter the cost. I'm telling you right now, you could spend $30,000 on market education, and it will pale in comparison to what we can do here at TheoTrade. we have, that ability, and we have instructors, and our instructors come from trading backgrounds. Like nobody has like, the big background in anything other than trading. They worked in different divisions of trading, either at firms, trading firms, market making firms. Okay. Just hired another gentleman on the support side to help answer emails and so forth. His name is Todd Sweet. It's market making background. Okay. Market making background. We're TD Ameritrade. Okay. In a registered investment advisory position for a couple of years. We just brought him on here at TheoTrade. That's the kind of people that not only do we bring on board here, but it's the kind of people we want. And we trade. We trade throughout the course of the day. All of us trade. In fact, we talk about the trades that we do before we even send them out to you. Anyway, send us your trade. This $297 riskless, the $297 riskless offers never been available before with Ultima Income Generator. You get the TheoTrade portfolio. Again, we have new classes that are constantly coming out. As I said, what our members are saying, my closed year-to-date profit from Ultimate Trades is paid for my yearly subscription. That comes from John. Everything that's for $297. Ultima, Quick Start Beginner's Guide, over 100 different classes. You actually get access to the chat room. I know that some firms charge another $300-400 a month just for the chat room. It's part of it. By the way, I love doing that. So everybody knows the instructors. Okay, we all do approximately anywhere from an hour a day. So we actually have 8 full-time instructors. So we have over abundance of time. In fact, today, after the close today, we have another hour chat after the close today. So again, 100 trading classes, access to the chat room, the TheoTrade portfolio. Okay, we have the technical analysis toolkit, the day trading treasure chest, the mindset mastery, which is Slim Miller, one of Slim Miller's classes in there. It's awesome. And the quick start guide to ultimate trades. If you go to theotrade.com/skew, you can actually follow me to the auto expected move indicator, but allow me to take you over there again one more time. So go to theotrade.com/skew. Apparently Todd is there to support people, but there's 30 riskless spots today. When you click add to cart, and I want to go through this really quick. When you click add to cart, I know I briefly mentioned it earlier, okay? Put your phone number in if you want to receive text alerts. We do not bombard you with text alerts. That's not what we're about, all right? We're very, very, I guess you got to be careful with that. So we're conservative in what we actually send out. What typically happens is you might get like 2 text alerts a week. All right. It'll go dark for a couple of days, and then all of a sudden you get a flurry of text. And then we'll go dark for a couple of days, you get a flurry of text. When I say a flurry, if you got more than 4 text messages in a week, I think it would be kind of a rare thing. And it's because what we're doing is selling premium, buying it back, selling premium, buying it back. It doesn't take a lot of text messages to do that. The payment information, single payment, 2 payments, 3 payments, that's up to you. We just do that to make everybody's life a little bit easier. Because again, we understand life circumstances get in the way from time to time. But anyway, for the first 30 people, there is a money back guarantee. Oh, last thing on that page there. After clicking add to cart, obviously enrolling for it, okay, there is the auto expected move indicator. Those of you enrolling need not download this from this page. We have all the indicators. We'll give them to you. We'll actually even help you load them up if need be. So I'm going to go in here and I'm actually going to answer some general questions, then specific questions. The other thing I'm going to do is I'm going to read off. I will read off, okay, first name. And again, will reiterate this for a second. I will read off your first name and your last initial. Obviously, people are concerned. Am I in one of the 30 riskless spots? I'll actually read off the first name and your the first initial of your last name to let you guys know, obviously, that you're enrolled. By the way, it takes me about 6 to 7 minutes before I see your name kind of populate in here. And again, we're going to throw a bunch of questions in here as well. So it's theotrade.com/skew. I'll just first batch of names: James T from New Mexico, Neil H from South Carolina, Elton K from California, Dorothy C from California, Kevin T from Georgia, Edward M from Florida. Again, a bunch more questions or a bunch more names will pop in here, and I thank you guys. That's just the first batch of about 6 names that's running through. Take me about 6-7 minutes before I see the next batch of those. So again, what our members are saying, I wanted to drop a quick email. I think the class is wonderful. I've been stretched in each session, but not beyond my capability. Okay. After each session, I watch the recording and do the homework. I feel each week that my knowledge of options is, growing steadily. So obviously can't speak for my classmates, but it's going very well for me. It comes from Jeff. Anyway, one other email I wanted to throw up here. This comes from Todd Summerall. And the reason I'm throwing this email up here is to show you like what we do in terms of answering emails. Don't know if you remember me, but I emailed you a few weeks ago and told you my delta was positive a couple thou or more. You told me smash it or I was going to be in trouble. I smashed it. You saved my account. I just want to thank you. We go into a level of answering client questions. As I said, I don't think anybody in the industry does. Like if you even call up Charles Schwab, the brokerage firm, they don't even talk to you about your positions anymore. They can't. So we're kind of like that one last stop where you can actually bounce critical ideas off of it. This is a gentleman that came to me and said, hey, he's like, listen, I'm not comfortable with my risk. Can you tell me where I stand? And I just looked at his position and I said, you got to close this crap or you're done. You will blow up your entire account. We saved his entire IRA. It says, big hearty thanks to you and all of your team. My finances would have been a goner without your advice. You can use this if you want, which I did, right? So let's answer some general questions and then get them some specific questions. General questions. I'm going to rip through these quick because everybody always has the same kind of general questions, and I'll get into the kind of the finite questions in here. But people always ask me like, what do I need to get started? You need a laptop and an internet connection. I will make the argument you could actually use mobile devices now. So not only do we have a mobile trading application that you can use through, like the brokerage firms have mobile trading, but we also here at TheoTrade built our own mobile trading application so you can view the different classes on your mobile device. So I would prefer though, like if somebody had a tablet, like an iPad and or an Android tablet, but we have, and it's important to me that you guys know this, but we have everything you're going to need to get started from just novice to the most extreme. And if we don't have it, I want to hear about it. Second thing, this is not a membership. We don't do membership. We don't do that anymore. We don't auto renew. We don't auto bill. The reason is, okay, I hate it. You hate it. Like nobody likes the reoccurring monthly charge. No matter what you might say, you're like, it's convenient. Okay. Hey, listen, I'd rather bother you every 3 months and say, you want to do this again? I think you'll appreciate that because we don't like when people are like, you hit my card for $300 charge. I didn't know. We don't do that. We just don't do that. So I just want you guys to know that because that means a lot to me. I've honestly, in the past, I've had gym memberships in my life where I could not get out of the gym membership, could not get out. I'm gonna tell you guys a quick story. So living in Scottsdale, Arizona, COVID hits, okay? And we have some friends that live in the Virgin Islands. So I decide, that's it, let's get out of here. Let's get out of here because the kids are not in school. We pick up, we move to the US Virgin Islands for 6 months. Gym reopens. They say, you physically have to come into this gym or you cannot end the membership. And I'm like, cut them off from the credit card, did a little dance, made a little love. I had to send a certified letter to them to get out of this thing. I mean, it took me like half a day to be able to get out of a gym membership. I despise the memberships thereafter. By the way, we ended up moving to the Virgin Islands permanently. I'm back in Arizona right now. I don't know why. It's freezing here and there's snow. So I'm up in the mountains in Arizona right now, but we live now in St. Croix in the Virgin Islands. Anyway, we're also now providing Theo Theta weekly video updates. So you don't have to be concerned about like missing stuff in the portfolio. So we do text messages, we do this, we do that, but push all that aside. 12-minute video comes out on Friday afternoon. In the 12-minute video, it will pack everything you would need to know about every strategic move we made and why we made it. Number 5, we give you access to TheoTrade Mobile. You can download archives and view at your leisure. By the way, TheoTrade Mobile also has the capability to speed the archives up. So you can watch like an hour and a half hour. I sound like a chipmunk, but works for me. Number 6, add your cell phone number when enrolling, because you're going to receive trade ideas via text messages and downloads. All right. So when I say add your cell phone number, that's to get the text messages. But if you live out of the country, like we have lots of clients down in Australia, tons of clients, in like Singapore, all over Europe and so forth. And we get it. Like they can't get text messages, but you can get push notifications. So that's why we built TheoTrade Mobile. All right. Number 7, you can email us anytime. You'll get a response within a day. By the way, I put the 24 hours in there for one reason. When you email us, just please understand, people will email us on expiration Friday. There's 5 minutes to go to the close. We're like, we trade. So most of the time we answer emails either before the market opens or after the market closes, right? I mean, we answer some during the day too, but we trade. So give us a little bit of time. The average email takes less than 90 minutes for a response, all right? Less than 90 minutes, but we put the 24 hours in there. I put it in there to just simply tell you, don't email me on a Friday afternoon with 5 minutes to go to the expiration, because I'm usually like, I trade a lot. Number 8, you're going to gain access to everything we've done in the previous, now it's 6 years, including classes and coaching and live trading sessions. So everything that we've done here since inception of 2016 to right now, all the archives are searchable. Name a trading topic, and we have an archive on it. Number 9, variations of the trades that we talked about today are available to do inside of an IRA or retirement account with as little as $2,000. Okay. Number 10, at TheoTrade, we can help you get approved for options. Listen to me very carefully. Not every brokerage firm allows you to do, every trade. So we definitely have some suggestions regarding brokerage firms. People say, but I love this firm. I get it. But you have to understand, most of the brokerage firms today kind of put the handcuffs on you. They don't want to do anything. They don't want to change. Okay. Charles Schwab, like the brokerage firm now, which they bought TD Ameritrade. Do you realize that Charles Schwab is significantly larger than is Goldman Sachs? Blows my mind. Okay. It absolutely blows my mind. Like they're the big, monkey out there. And I kind of feel like, they're not letting you do as much as they used to. Number 11, remember 30 riskless spots that are available. By the way, I have some more names to read off. Listen, enroll for TheoTrade right now. There's no risk to you. So I am going to pop this up here. I'm going to answer now some of the specific questions. Again, some specific questions that have come up because I'm actually reading, obviously, the chat directly. Prior to that, though, let me actually pop this back up here. Again, you just simply click add to cart. Let me actually throw it's TheoTrade.com. Again, TheoTrade.com/skew. So a few more names that had populated in here, and then I'm going to get to some of the questions. Shane C. from Texas, Thomas D. from California, Craig C. from Oregon, Brian M. from New Mexico, Monique L. from Georgia, Anesh J. from New York, Donald K. from Pennsylvania. There's a few more names about to populate in here. Let me get to some of the specific questions that came up. One of the first ones is, how do we offset the margin requirement, like you mentioned? So we're actually going to trade a variety of different products. That's the whole key to it. It's what products you actually trade. So certain products have vastly different margin requirements. And what most people do not know is there's a couple of new products out. Yes, I'm saving this for the class. There's a few new products out that expressly, they don't hold the margin. They're not under SEC and FINRA guidelines they don't hold margin like a Reg T account. So it's pretty phenomenal right now. Like sky's the limit. Like you can now do the same trades that even market makers can do with the same amount of margin that like market makers can. It's brave new world out there. I like this. Would like to trade options, Apple or large stocks. swing trading 7 to 15 days. Okay. Yeah, no, we have a resident swing trader as Corey Rosenblum. So the other aspect is there's a class, if you're into swing trading, there's a class that I implore you to watch. It's called in-out spreads. Now that's outside of the scope of what I'm talking about today. But if you're going to swing trade, you're going to love what we're doing with in-out spreads. I mean, you can literally put on trades $50 at risk, $100 at risk, very, very minimal. That's the margin too. Like if you have $100 at risk, that's it. That's the margin. The reality of those trades is, yeah, you're in, you're out, you're on with your life, but it is just perfect for swing trading, especially in that 7 to 15 day time frame. All right, continuing on over here. Do you trade straddles on stock earnings? No way. It doesn't work anymore. Just gonna blanket statement. So if there is one thing that we're really good at doing here, TheoTrade is as much as a research group as we are education. So we spend a lot of time and a lot of money of our own capital. Earnings, there's no great edges in earnings. And I stress to you that earnings, I can show you hundreds of different white papers written about options and earnings. And that edge in earnings is really dissipated in recent years. So if you're going to sell options premium, I'll tell you what, use Ultima, go further out in time, stay away from earnings. I like this this next question and comment. It seems like this may be trying to drink from a fire hose. How do you avoid information overload and the ability to get started in the right path? Okay, so as you come into TheoTrade, by the way, I don't mind if you want to email me specifically, because I enjoyed this question, but if you want to email me specifically, give me an idea of your account size. Give me an idea of what you want your outcome to be, what your timing is. When I say timing, like, do you want to sit in front of computers? Like, listen, I don't mind telling people I trade and I trade a lot throughout the course of the day and I sell premium. Okay. But that's the mainstay of what I do. It's what I've always done. If you're somebody though that's working for a living, like, what's going to be the right strategy for me? I have a $5,000 account, but I also have like a $500,000 IRA. Where do I start? You hit us with that. That's actually okay. But come in here with one, single strategy focal point, and you'll be much better off, because that's just an easier means to the end. You can proliferate thereafter, but people are right. Like we give you a lot of information here. All right. Can you share futures in your IRA account? How difficult it is to get permission for futures in your IRA? So yeah, to trade futures in your IRA depends on the brokerage firm though, but it's pretty straightforward. It's pretty simple to do so, and that's something we can give you some more tidbits about. And again, the futures in your IRA at Thinkorswim is plausible and possible. There's one big caveat though. If you're trying to trade futures in your IRA at Thinkorswim, they're going to want you to have pretty good amounts of money. Whereas if you look at Tastyworks, Tastyworks says, no, have $5,000 in your IRA, you can do whatever you want, which we put a lot into Tastyworks because Tastyworks is changing. It's changing the whole, game in terms of brokerages. They are allowing people to do what they want with their capital, even in the IRA. And that's something that many of the other brokerage firms have not yet actually caved to that idea. I like this one. Somebody said, got hammered or got beaten up, need to know how to protect my positions without spending a fortune doing so. If you are looking for risk mitigation, here, I'll just show you exactly where it is. Okay. So in terms of courses, like risk mitigation on a portfolio, we have entire hedging. We have an entire hedging archive, and this is me. Like I'm a hedging fool. So we teach you survive extreme volatility, beginner's guide to hedging and capital allocation. This is the atomic hedge. We have other classes as well, like fixed volatility spreads. There's a lot of hedging related, education here, because I think it's imperative. Like if you have a stock portfolio right now, dead serious about this, a stock portfolio, I don't care how big it is. Okay. You have tremendous risk. Market's at an all-time high. I could have said this a year ago. Market is at an all-time high. It's at an all-time high. okay? But you can feel the changes in the market right now. You can feel the volatility starting to pick up out there. Hedge now or forever hold your peace. We'll teach you exactly how to do that. Another question, do you use the expected move in the option chain? Yeah, so on Thinkorswim, if you're kind of curious which expected move I use, yes, I do use the expected moves in the option chain. I help build the equation on Thinkorswim. There's a lot of features in Thinkorswim that myself, Jeff Bierman, okay, helped build over the years. So Jeff Bierman was also at Thinkorswim very, very early on, but there's a lot of features in this platform that we help build. So we give you some pretty interesting insights to building those. We do that throughout the course of the education here. By the way, does this trade analysis assume no movement for the underlying? No, absolutely not. So all the trades that we're doing are live too. So forget about trade analysis. Let's actually look at live trades. And that's exactly what we'll do. So no, there's big movement in a lot of underlyings, big up movement, big down movement. I mean, we've had some wild trade throughout the course of this year. You know, what's funny is like everybody thinks about like, oh, the marketplace almost sold off at this point. The up moves has been just as violent, okay, as the down moves. Anyway, I like this one. This last question over here is what's the best time to put on a VIX volatility spread? Well, it depends on your positions. So the VIX volatility spread will get you in tune with exactly when to be able to execute the VIX volatility spread, depending upon overall volatility in the marketplace. Anyway, I read off a ton of names in here. There's a handful of spots left in the 30 riskless spots. I've run way over in time. It's TheoTrade.com/skew. I want to thank each and every one of you here. Again, if I didn't read off your name yet, it takes me 5 to 7 minutes before I actually see your name populate in here. I do apologize for that. Vincent P. from Maryland, Michael A. from Indiana, Claire D. from Hawaii. These are a couple more that are just coming through. I thank each and every one of you guys for tuning in today. If you need anything, never hesitate to shoot us an email, support@theotrade.com. Thanks everybody for tuning in today. Have a wonderful afternoon. Bye-bye.